to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now, because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidising, you stop
Using
burying money into fossil fuels.
Right.
It could be carbon sequestration, it could be fuel rebates, it could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, we've kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial, it'll never be supplied in the quantities we need it, blah, blah, blah. Now we know, let's take action. It's practical, it's implementable, let's do it now.
Okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn the gas. At least they're pumping up carbon and methane into the atmosphere, honestly. Well, not that honest, because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. There's renewable power all over the world. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know
Mr. Force,
which is declining in value.
You don't have enough of it, right, to power the world?
Yes. That's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down. Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. From Bloomberg's world headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the SNAM model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, the so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, $600. Today, $100, and we see it going down to $50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia is very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
thanks to the bipartisan infrastructure law. Look, this is a time we took a different approach also to trucking. Remember, last December, we brought together industry and labor to tackle problems facing truck drivers. It took we had to double the number of commercial driver licenses being issued by the states in order to speed things up. We did it. We sped the creation and registration of apprenticeships, allowing aspiring drivers to earn while they were learning. The result? We hit a record-setting employment in trucking earlier this year. And truckers' wages went up even after accounting for inflation. We're going to keep at it with the new super chain envoy, General Steve Lyons. General Lyons is a 4-star general. He handled the transportation of a little bit of thing. He had transportation command, only tens of millions of billions of tons of things to move, from little things like tanks and aircraft and all that. But all kidding aside, he's come off the sidelines. He's retired. He's helped us identify and get ahead of the challenges that arise at our ports, our railroads, and on the road. This is about reducing costs for families. You know, I have to admit to you, a lot of us elected officials have been in office for a while. Every once in a while, something you learn makes you viscerally angry. Like if you had the person in front of you, you'd want to pop them. No, I really mean it. There are nine major ocean line shipping companies that ship from Asia to the United States. 9. They form 3 consortium. These companies have raised their prices by as much as 1,000%. So everything coming from Asia, they get 90-some% of it, the stuff coming from Asia. They've raised it by 1,000%. That's why I called on Congress to crack down on their foreign-owned shipping companies that raise their prices while raking in just last year $190 billion in profit, a 7-fold increase in 1 year. 7-fold increase, 190 billion. The Senate passed legislation. I'm hopeful the House is going to act soon to crack down on these companies, as I've asked, and lower the cost. And I'm grateful to 2 Californians, Speaker Pelosi and John Gerardi, for leading this effort. Thanks, John. I really mean it. It's a big deal. People at home trying to make it, paycheck to paycheck are wondering, like, what in God's name do 9 shipping companies have to do with it? Well, almost everything you're doing, everything from what you're eating to what you're having to drive to what you need in your home, it related to supply chains and what's coming from abroad. I'm doing everything in my power to blunt Putin's price hike and bring down the cost of gas and food. I led the world to coordinate the largest release of the global oil reserves in history. 240 million barrels to boost supply to keep prices from rising even more. Thanks to America's leadership in diplomacy, we've helped Europe reduce its reliance on Russian oil by tripling our natural gas systems to Europe compared to last year. And I'm working closely with our European partners to get 20 million tons of grain locked in Ukraine, already in their silos now. Ukraine and Russia, the 2 major suppliers of grain and corn. They have 20 million in their silos right now. So we're trying to help them to get that, and the Russians are blocking the export. They're not allowed out through the Black Sea, and we're trying to figure out how to get it out of the country to get it to around the world. It will bring down prices. But there's more. There's more than one way to solve this problem. We're continuing working to bring down food prices and gas prices and save families' money by dealing with other items. My dad used to say, it's all about the standard of living, how much you have left in the paycheck at the end of the month. How much is left to do the basic things? So if you add up all the things that people need just to do everything from take care of their kids to turn the heat on or the air conditioning on and everything in between, there's a lot of ways we can reduce their cost of living, other than while we're trying to get at the grain and gas. We laid out a plan, for example, lower prescription drug costs. That would fundamentally affect the well-being of every family. Those of you who know somebody who has type 2 diabetes and has an insulin requirement monthly, you know it costs an average of $647 a month. It can cost as high as $1,000 of some places. You know how much it costs to make that one little vial of insulin? $10, T-E-N, $10. No new research has been done since that was invented, and the charging is outrageous. So I think we should be able to have the Medicare do what they do when they deal with the VA. VA says, we're only going to pay you so much for this. If you don't want to, and because the Medicare negotiates the price for them. Well, if Medicare is able to negotiate the price in insulin, guess what? It comes down a whole hell of a lot. Outrageous numbers. So we could put a cap on insulin at $35 a month, and they'll still make a significant profit. $10 to manufacture, $35. For example, we could begin by lowering the cost of high-speed internet, because what you all did dealing with the infrastructure bill, working with the service providers, we cut the price and raise the speed, potentially lowering high-speed internet bills on the average for average family $30 a month. Okay, well, you're paying extra more than $30 a month for your gas, but that still increases the money out of pocket, decrease the amount you have to put out. The point is, we're doing everything in our power to lower cost of families. But congressional Republicans, led by Senator Rick Scott, have a different approach. And if you didn't write it down, you'd think I was making it up. And I mean it sincerely. Rick Scott tried to change his words yesterday, by the way, after he introduced this. He's been campaigning. He's the guy that had the re-election of the senators on the Republican side. He realized that raising taxes on working families is a little unpopular. He said everybody, no matter what their station, if they're on welfare, should pay a tax. Everybody should pay a tax. Well, but here's the truth. One concrete plan that they laid out was going to raise taxes on working families an average of $1,500 a month. While we have 54 corporations out there didn't pay any tax the last 2 years and made $40 billion. They don't want to tax them at all. They don't want to tax billionaires are literally paying a lower tax rate than longshoremen are paying, literally on a percentage basis. So he hasn't walked back from his plans on health care. He says what we have to do, now that we finally got the Affordable Care Act functioning and the prices down, an average of $400 for people, he wants to eliminate it. Again, they're back at one, eliminate it again. So, and by the way, the one that's the best thing that the Republicans are pushing now, in the re-election, is that they think that Medicare, I'm not making this up, go online, look, Medicare, Social Security, and Medicaid go on the chopping block every 5 years. What that means is at the end of 5 years, they go out of existence unless they're affirmatively voted back into existence every 5 years. Medicare, Social Security, Medicaid, and they forget, people paid for their Social Security. They paid for it. And you know what's going to happen? People say, well, they'll never eliminate it all, but what they'll do, they'll be able to pick it apart. They'll be able to cut it back. That's the whole objective. And folks, you know, it's not right. It's simply not right. And I disagree. And that's what, look, this is not your father's Republican Party. This is a different deal. It really is. I've worked with a lot of honorable Republicans, very conservative Republicans over the year when I was a senator. But this is the MAGA gang. This is the MAGA crowd. I really mean it. They have a fundamentally different view of the role of government and who should pay what. And I'm going to work with anyone, Democrat, Republican, Independent, to deliver real solutions for families. Look, because of the strong foundation we built, we're better positioned than just about any country in the world to overcome the global inflation we're seeing, and to take the next step towards forming a historic recovery and a new moment. And I count recovery as going from where we are today in terms of the economy to stability, to make it stable. It is strong as can be, but for inflation, but for gas and food. And look, we have to keep coming together to find common ground to solve problems like we've done in the ports and in trucking. We continue to build the extraordinary progress we've made. So we got to continue building this economy from the bottom up and the middle out. And I mean that literally. I am so sick and tired of trickle-down economics. It does not work. When the middle class is doing well, and they do well because of labor, when the middle class is doing well, the poor have a way up, and the wealthy do very, very well. They have never been hurt when the middle class is doing well. Never, never. So it's about time we start to regather and remember who we are and get a lot of this done. But there's no better place to start than right here in the port and letting those 9 foreign shippers understand the ripoff is over. Thank you. Thanks. All right.
Exxon's profits, are you gonna go after them?
We're going to make sure that everybody knows Exxon's profits. Why don't you tell them what Exxon's profits were this quarter? Exxon made more money than God this year. And by the way, nothing's changed. And they're not, by the way, one thing I want to say about the oil companies, they talk about how they have 9,000 permits to drill. They're not drilling. Why aren't they drilling? Because they make more money not producing more oil. The price goes up, number one. And number two, the reason they're not drilling is they're buying back their own stock, which should be taxed, quite frankly, buying back their own stock and making no new investments. So I always thought Republicans are for investment. Exxon, start investing, start paying your taxes. Thanks.
That was President Biden there at the Port of Los Angeles, speaking about the economy, speaking about inflation, the actions the administration is taking to lower prices, address some of the supply chain challenges. And there at the end, following a question from press there about oil specifically.
Yeah, the president saying Exxon made more money than God this year. I also said that Exxon should start investing and paying its taxes.
You know, it's interesting. I thought it was fascinating to watch the energy sector today, which has been a standout last year, this year.
How's it doing today, Carol?
It's lower today.
Nowhere to hide, I think, is what you told me a little earlier in the day.
So I find it interesting. And I think, you know, you're a publicly held company. You know, before you make investments, you're going to make sure those long-term investments will pay off, because you start drilling or start taking the steps to do it. It doesn't pay off right away. And with the shift to renewables, alternative energy, those fossil fuel companies are hesitant to expand.
I also wonder about, I don't know, if you want to work, if you're an administration that wants to work with energy companies to bring prices down.
Yeah, I wonder how that meeting's going to go.
Yeah.
Warm and fuzzy. Hey, everybody, it is Friday. It is June 10th, 2022. Carol Massar, Tim Stenovic. We are live in our Bloomberg Interactive Broker studio. We are streaming on YouTube. We have so much to talk about. Consumer inflation, hot. Consumer sentiment, not. Fed feeling the heat. There's a chill in the equity markets. Treasury yields hitting the highest since 2008, especially that shorter end of the yield curve. We're going to talk about all of about this, but it really is all about the inflation print today.
Yeah, it is. We knew it would be an important one, Carol, no matter which way it went, and we got an unexpected acceleration in inflation. We're going to talk to a longtime bull taking the other side when it comes to inflation.
Looking forward to that. Amid the daily grind and stress, our Bloomberg Markets magazine taking a longer view, asking top execs which innovations will make a difference in the next 30 years. We do need to look longer term.
Plus, in the current issue of Bloomberg Business Week, 3M at the center of a major political scandal in Belgium. It all has to do with those forever chemicals.
Oh my God, this story. Another company on our radar, Disney, not all as well in the Magic Kingdom. We'll get to that. And then the founder of the company that bears her name, Tory Burch, will join us to talk about the retail environment and embracing ambition for women entrepreneurs.
And we're talking real estate with the ¡1 agent in the nation at Douglas Elliman.
We got to ask her about those hot rental prices here in New York City. What's up? I thought everybody was leaving.
In Miami.
All right, let's get to the business day, the top business stories. A lot going on, and it's definitely a market sell-off here, Doug.
Yeah, it's a market day, right? I mean, we began with this very hot reading on retail inflation for the month of May, an increase in CPI of 8.6%, and that's really forcing markets to reprice the path of Fed tightening. We've got yields now in the 2-year Treasury up by more than those for the 10-year, so we've got a bear flattening happening in the Treasury market right now. A 2-year Treasury at 3.03%, up 22 basis points. That's a gargantuan move. 10-year at 3.14, higher by more than 10 basis points on the day. Dow Industrial Average right now weaker by 2.3%. The S&P coming in by about 2.6%. The NASDAQ Composite is down about 3.2% right now. Now, one of the things that we're seeing as a result of the move up in rates, a much stronger dollar. The Bloomberg Dollar Spot Index higher by about 0.8%. Of course, the Fed meets next week to consider all of this. And policymakers have already signaled they are going to likely raise rates by 50 basis points. But today, the conversation has changed somewhat. A discussion around a 75 basis point hike. Probability of that happening, though, is only about 50%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Don't you feel like you're at an auction house, Doug?
50 was so yesterday,
do I hear
Carol.
50? Do I hear 75?
So yesterday.
Right?
Yep.
Ugh, it's rough. All right, Doug Krisner, thank you so much with an update on today's trade. All right, let's get to it. Let's get more to our market drivers report. And let's set our Business Week agenda on this Friday. Michael McKee, international economics and policy correspondent here at Bloomberg News. He's on the phone from Boston. And then in our Interactive Brokers studio, Jess Manton, equities reporter at Bloomberg News. It's almost like I don't know where to start because the market reaction was so swift. But we do have to start with the king of the ball, and that is Michael McKee. Because, Mike, that inflation print, we were all kind of counting down all week to it.
Everybody thought that we were going to have the peak in inflation in April, and instead we peak again in May, and we will probably peak again in June, given the way gasoline prices are going, and they're the big driver here, up almost 49% over the past year, and still rising. And the problem for the Fed is, of course, food and gasoline. They can't do a whole lot about that, especially food. So this is a real problem for not just the central bank, but obviously the political implications of this are pretty bad, too.
Yeah, I mean, the double-digit increases in so many places. My grocery prices up 11.9% from May of last year, electricity 12%, and then rent, primary residence up 5.2% from May of last year. I wonder, Mike, if there's any silver lining when you dig deep into this data.
Not a whole lot. There may be a little bit of unpolished metal in the core report because on a year-over-year basis it went down, but a lot of that is just base effects. It is stabilizing, and that would be good news, especially if we see something like housing start to level off. It didn't last month, but we know sales are down, so maybe prices will start leveling off or falling. If that were to happen, then it would be a good signal for the Fed that their medicine is working and that something's happening. But it isn't really going to help Joe Biden because it just keeps coming back to the idea that people notice food and notice gasoline when you're paying $80 a tank. They're not making a distinction between the core rate and the headline rate.
So do you feel like, Mike, that we will see demand destruction at some point?
Oh, I think we're already seeing it in some areas. You're seeing it in housing, new home sales and existing home sales falling because mortgage rates are up. We're seeing it a little bit in driving, not enough yet to say it's a trend. But the problem is for the Fed that food prices are a major driver of the headline inflation numbers these days, and you don't get demand destruction there. You get because people have to eat. They substitute. But in this case, the old, well, if they can't get steak, they will buy chicken. You know, chicken's really expensive now, too, because of the bird flu. So there's no good answers on the headline side for anybody at this point.
Well, and it's interesting that you say food because I was looking for gainers for later on for our simulcast, and it's like Hershey and I think it is Kellogg.
Were you even able to find 3 stocks higher, Carol?
Well, it's some food names that are actually the gainers in today's session. Let's bring in Jess Manton. She follows the stock market. Tell us how you're seeing this, especially the sell-off that's playing out today.
Right, obviously a sea of red today, and all 11 sectors in the S&P 500 lower, and led obviously by declines when you're looking with technology and what's happening with the relationship with yields, and the 10-year spiking above 3.1%, and obviously the relationship they have as far as how that ties into their future earnings and their valuations, really seeing pressure there. But then also on the technicals level, one of the key levels that technicians were keeping a close eye on was the May 23rd intraday high. That was after that prior Friday when the S&P had sold off more than 20% intraday. And then, we broke that level today. And then the next one they're keeping.
High or low?
It was the intraday high on May 30th. May 23rd, and then the intraday low on the prior Friday was 38.10, which is also roughly around that 38% Fibonacci level. We're not there yet, but that was what that low was on May 20th. And so because we broke that intraday high of 39.82, that does not exactly bode well when I'm talking with technicians.
The S&P 500 right now at 39.22 as we speak, down 2.4%. Jess, you have a new article just crossing the terminal right now. It's all about S&P 500 margins tanking. We've talked about this with Gina Martin-Adams and what we're looking at in terms of margins in this market. What specifically were you looking at, and what's it telling us?
So the big thing, and I was using Gina's data, is operating margin forecasts can be a leading indicator of where stock prices are headed. So when you exclude what's happening with energy and extrapolate everything else, operating margins are going lower, and especially for obviously discretionary type companies, but spreading to other sectors too, including communication services. And when there have been prior market indications, when there have been times like that, there was market turbulences in 2011, 2015, 2018, and 2020, whenever we saw those declines in operating margins. So based on Gina and her team's data, that doesn't necessarily bode well for the market. We're seeing that.
Because she's talked often, we're not in an earnings recession, but that margin compression, it's getting tougher and tougher, right?
Yes.
For them to pass costs along. So the companies are going to have to eat it.
And exactly. And when you're looking at those EPS forecasts, those are still intact. It's obviously the forecast for the second quarter, not quite as strong. It's around 5%. For the second half of the year, though, it's about averaging around 10%. So there are some speculation that now that we've seen more companies come out recently and start to lower their guidance as far as what they're projecting, potentially companies, they could beat on those expectations, and that could potentially bode well for the stock market. But that's if we see more and more companies in the next few weeks. So that could be potentially a silver lining for the stock market, but obviously there's a lot of caveats when you're seeing so much pressure right now. But that's what strategists have told me. They're trying to see if potentially we see that with companies.
All right, Mike, we're going to have coming on Neil Dutta over at Renaissance Macro, someone you know well. We all do. I love his notes when they pass, and he had one that came on that said after the data this morning, if no one, actually I think it might have been ahead of the data, if no one will take the other side, I guess I will. And he's talking about CPI, but the Fed, what happens with PPI and what happens for PCE, which is the Fed's preferred inflation measure. And he was pointing out some of the differences that we've been seeing. I don't know, what are the data points that you need to think about or we should be thinking about in the next week or so? Especially ahead of the Fed meeting next week.
Yeah, we'll get PPI next week, which is interesting because it has a category called trade services, which is basically a proxy for margins. And so you were just talking about S&P margins getting compressed as expenses rise. That'll give us a sort of picture of that. The biggest thing we'll watch next is the housing reports that come out, because we want to see if prices are starting to go down. The PCE, which is, as Neil said, what the Fed follows, doesn't have as big a weight for housing as the CPI. So it's going to come in a little bit lower, but it's still likely to be rising because energy costs are just up so much.
Mike, are you depressed?
I tell you what, Carol, I'm here in Boston, and the BLS put out the inflation rate for various cities around the country. You do not want to be in Tampa. 11.1% is the CPI for Tampa. Yeah. In Boston, it's only 7.5%. Gee. But the thing everybody's talking about here is Celtics tickets, the most expensive in NBA playoff history.
Oh, man.
So is that a yes or a no?
There's your inflation.
So no demand destruction there. Mike, plane, train, or automobile?
Automobile on the way back, came up on the train.
Okay.
So I'll get a good picture of what gas prices are like along the Northeast corridor.
But you know what I'm asking? Are you concerned? You've seen so many cycles. Are you, I love what you said at the beginning, that every time we come to one of these prints, we think we're at a peak. We're all like, inflation, is there, inflation? And then all of a sudden, no, we're not. So help me.
Well, I think that there is reason to be concerned. There's not reason to say one thing is going to happen or another, but obviously inflation is not behaving as people thought. And one of the big reasons for that is this is a completely different time period, completely different economic situation. We're still dealing with some of the pandemic questions. Mm-hmm. The airfare numbers still going up double digits. because the airlines can't find enough pilots because of COVID. So at this point, it's hard to say exactly what's going to happen. The one big difference that we do have this time is that the economy is so much stronger than it usually is when you see inflation rising into a kind of a Fed-induced recession.
Right.
So do we go into recession? Do we just skirt it? It's hard to say at this point.
Yeah, that's what I want to ask Neil Dutta. And I don't get it. The labor market's so tight. Really quickly, 15 seconds. People you talk to, are they worried that we're definitely not near the bottom in terms of the equity trade?
It doesn't seem as if, when I'm speaking with technicians, they don't think that we have hit the bottom yet. And Gina's team, they're expecting, if there is indeed investors pricing in a recession, the level would be 35.86 on the S&P 500.
That's a little ways
Still a ways to go.
Okay. Thank you both so much. Bloomberg News International Economics and Policy Correspondent Michael McKee, Bloomberg News Equities Reporter Jess Menton. So we're going to go right to our next guest, who we just kind of teased up. Because what I love about this next guest, he calls it like it is. I was talking with our Paul Brennan. He's got edge. I love his quick notes. I mentioned the one message he sent to those of us on the Bloomberg today. If no one will take the other side, I guess I will. He's a friend of Bloomberg, a longtime bull, head of economics at Renaissance Macro Research. And actually, you might have seen that there was a big story on the Bloomberg that really cited a lot of his work about maybe 2022 will end on a brighter note. We welcome Neil Dutta, partner and head of economic research at Renaissance Macro, on this phone in New York City. How are you?
I'm doing well, Carol. How are you? It's been a while.
It's been too long. I read your notes. I love it. You have edge. You're a little snarky sometimes, and I kind of love that. So
only to the right people.
I feel very lucky to be included in that group. So tell me about how we should be reading this print.
Well, I mean, I think look. I mean, I think from the Fed's perspective, they have no reason to sound anything but hawkish at their upcoming meetings. So when you think about the data that's been coming out, core CPI inflation on a monthly basis actually rose at its fastest pace since June of last year. So, then later today we learned from the University of Michigan that 5 to 10 year median inflation expectations jumped to 3.3%. I mean, that's quite concerning, I think, from the Fed's perspective. So the Fed has to be seen doing something, and I definitely believe that they have a very good window right now to kind of signal sort of maximum kind of hawkishness.
75 basis points?
I don't know that they'll go that much, because I do think that 75 basis points, number one, it kind of undercuts the guidance that they put in place, at their last meeting. And number two, I think that would probably represent potentially a new pace of rate hikes at that point, which would then kind of, I think, shock the markets into, pricing in effectively a recession-like scenario. Pretty quickly. So I don't think they'll go that route. But I do think it certainly kind of cements 50 basis points at each of the next two meetings. And, as we're seeing, getting people to kind of price in a 50 basis point move in September. So, and I think if they go 50 in September, my gut tells me that would probably be what they do at the next meeting. So essentially, you have sort of 4 meetings in a row of 50 basis point moves, and that's kind of in line with their get rapidly up to neutral. And at that point, it becomes a question over, is the Fed going to start talking about getting policy, in a sort of mode that will actively kind of, slow things down, where people are losing their jobs and in a meaningful way,
right.
And the unemployment's going up, and that's what they're going to do to get inflation down. I think that they would have to sort of start making that, acknowledging that at that point.
Well, as you did write in your note, you reminded everyone that core PCE and PCE in general is the Fed's preferred inflation measure. So what happens when we do get those PCE numbers? What does that do for the Fed?
I think it gives them a little bit more space, frankly.
But does it even matter if consumers are feeling the pain to the extent that they're feeling right now at the gas pump and at the grocery store?
I just think nothing matters right now. The question is what's changing over the summer that could make things a little bit less, dire, right? And I think, I mean, at least as far as the inflation outlook is concerned, right? Because right now, I don't think anyone really disagrees with the idea that the Fed is hawked up. They're going 50 basis points in June or July. But as I say, things can change between now and September that may make it look like a bit more of a closer call. I mean, I'm of the opinion still that by the time we get to the September meeting, it's well within the realm of possibility that the markets trade 25 and 50 sort of as a coin flip. No one's talking about the Fed stepping back entirely. They're still going to be raising rates. The question is how aggressively will they be raising them? And the reason I say that is really a couple of reasons. I mean, number one, I think it's getting increasingly clear, at least from what I'm looking at, that the labor markets are slowing down. It's not alarming. It's not, recession, but we're not talking about the sort of labor market dynamics that existed just a couple of months ago, right? So not as many people are quitting their jobs. There's been labor supply that's being released into the economy. The participation rate's up, in other words, and we're seeing quits come down. That in turn is starting to take some pressure off of aggregate incomes, right?
How much? Hey, Neil, how much do you think of in terms of higher prices? Is companies taking advantage of the situation because they can? Or how much is it really supply-demand?
I mean, I think companies will. I just don't think that that's a reasonable explanation for why inflation is high. I mean, the reason inflation is high is really twofold. Number one, we have supply chain constraints that are a function of COVID-related stuff that we're seeing globally. And I think second, monetary policy was quite accommodative when it didn't necessarily need to be. I mean, remember back in during the pandemic, I mean, remember Larry Summers was getting pilloried for calling. Was getting, sort of, this is like what happens to, Cape Cod in the winter, right? I mean, that's sort of what he was talking about. Like, in other words, the economic ailment that we're feeling is basically a supply shock. It's like the same sort of thing that happens when, summer resort destinations shut down for the winter. It's not something that you should be, pushing a lot of demand-side stimulus into. So we had accommodative monetary policy, and then, look, I mean, fiscal policymakers fought the last war in many respects, right? You had elections where people were running on basically handing out, like $1,400 checks to people on top of whatever we had already done. So, I mean, a buddy of mine put it to me this way. If you put 3 Mentos into a bottle of Coca-Cola, what happens? It's really that simple. And so...
Didn't David Letterman do that or somebody? Anyway.
So you see what I mean? And
yeah.
So it's
like what Vincent, right? Isn't it to some extent what Vince Signorella said? And he wrote a note, basically this concept of when you throw so much liquidity out there and then you pull it off, it's kind of like trying to kill, right?
A fly on your countertop with a hammer.
Like there's going to be damage.
Yeah, I mean but as I say, I mean, like I was saying, is that there are reasons to expect the conversation to be a little different a few months from now. I mean, think about how the retailers have been behaving over the last number of weeks. I mean, the reason they've been selling off is because they have a lot of inventory that they don't know what to do with, and they've been signaling that they're going to be cutting prices. Well, right. So that kind of leads me to believe that, okay, well, maybe apparel prices will start to come under some pressure over the next couple of months.
But if it's still that expensive to produce that apparel, then to ship it across the ocean and then to get it from those ports to the store, then that's going to, 1, eat profit margins, and 2, not allow companies to cut prices as much as they could have in the past, because energy costs are at the core of everything.
Yeah, but I mean, then again, if you look at freight rates from Shanghai to LA, they've all been coming down. Like, the supply chain story is improving. If you look at delivery times indicators from regional manufacturing PMIs, those are also improving. So I would push back against the idea that it's actually getting more expensive to do these things. It's actually getting cheaper.
So, Neil, when is a realistic moment for us to think about inflation peaking? It wasn't in March, obviously. We saw it with this morning's print. When does inflation peak?
I mean, it depends what you mean by peak. I mean, I think we're past the worst of it in terms of sequential rates of change. And certainly core CPI, core inflation has peaked. The energy situation has made this turn into sort of a new peak. But I think core inflation has basically peaked already, ex food and energy.
What would you say to someone who says to you, well, it doesn't matter if core inflation is peaked because food and energy are so important?
because
I would say I agree with you, and the Fed does too, which is why they're hiking aggressively.
I mean, there's the Main Street story and the Wall Street story, right? Like, I got to go buy food and I got to fill my gas tank, but nonetheless, you know what the Fed's looking at. You know, you talk about peak inflation.
I mean, it's not like the Fed doesn't care about those things. I think that's sort of a myth that's sort of perpetuated by, you know, people that are highly disingenuous. I just think, look, I mean, you know how I know the Fed cares about food and energy? Because they care about inflation expectations. And inflation expectations are driven to a large extent by the stuff that you buy quite often. So that's food and gas. So if the Fed cares about inflation expectations, they care about food and energy.
So, Neil, I think one of the significant numbers, obviously in the inflation print, but the consumer sentiment numbers to me are a big deal, right? Because that will start to impact what people do. And I've been talking about it all week, and maybe I'm a little embarrassed, but like I was buying some stuff at the grocery store and was buying this big thing of paper towels, and it was like $25, $30, and I'm like, what? That's ridiculous. And I was trying to understand, and I'm like, I don't really need it. I was just going to kind of stock up, and I'm like, I'm putting it back. And like, you know, there are decisions that we are all making. And I do think about consumer sentiment. We do know that there are companies who are retracting, right? Certainly tech companies that are retracting job offers, like things are happening. So that sentiment number to me is significant.
Yeah, I mean, I think that consumer sentiment number is, I mean, right now consumer sentiment can really only go one way, right? Because gas prices are up and equity prices are down. And, you know, between those two things and employment, I mean, you basically have your model for what drives consumer sentiment. So, you know, 2 out of 3 are really bad, and the third is okay. But in many respects, people are, even though they're seeing wage growth and they feel confidence in the jobs that they're holding, they're seeing inflation eat away at their income gains. So, I mean, that's why consumer sentiment is doing what it's doing. That being said, there still isn't really any let up in consumer spending. You know, I mean, if you look, even the Atlanta Fed tracking estimate for consumption in the second quarter is quite firm, even in real terms. And so, you know, something like 4%, I believe. If you look at weekly sort of payment card, debit and credit card transaction data, it's still quite strong. And that just tells you that, you know, consumers have a lot of avenues to offset the impact of higher inflation. Right?
How long does that last, Neil?
I think it can last for quite some time. I mean, you know, certainly at least through early next year. You know, consumers are flush with cash. They're sitting on a record level of deposits. They you know, they still enjoy the tight labor market, and they have ample room to you know, increase their credit appetite. So if you look at something like consumer credit or revolving credit debt to, you know, let's say just like income, or you know, it's still well below where it was before the pandemic. And you know, look, I mean, we're seeing, as an example, people traveling. I mean, one of the reasons why airfares are so strong and hotel prices are so strong is because people are demanding those things, right?
Yeah.
I mean, so there's something to that too, and that's one of the reasons why the Fed is hiking so much, is because demand is so strong. So it's, I mean, a lot of this is sort of circular, but I do think, I mean, consumer spending right now is sort of the.
Yeah,
it's the last thing that I'm worried about. I mean, one of the main thing I'm worried about is basically inflation expectations kind of feeding into wages and actual prices, and I think that's sort of the disaster scenario for the Fed.
Hey, we only got about 45, 50 seconds. You were at the top of a story by Isabel Lee earlier in the week about market optimists make the case that 2022 will end on a high note. And you are at the top of the story talking about that. You still feel that way, and why? What's in a nut, real quickly, or the elevator pitch that why that's going to happen, just quickly?
I would say supply side conditions are improving. Inflation is likely to moderate, and that'll give the Fed an opportunity to step back.
All right.
There you have it. I'd like to end on a high note.
Okay, I said snarky, but I said that with love, you know. No, you're not bashful, and I love it. You really take a strong view on this stuff and then back it up. So, always fun. Come back more, and let's.
I appreciate it. Thanks, Carol.
Yeah, always. Be well and have a great weekend. Neil Dutta, he's partner and head of economic research at Renaissance Macro Research, and I mean it. Like, his notes pop across, and all of us, if you're on air, you pull them in. I know we have. I know the folks when I listen to Surveillance in the morning do it. And it's interesting because everybody is so negative. It feels like, except
for Neil.
Well, or you do get the market strategies like we could rally, we could sell off. But
Right.
I mean, but everybody just feels like they're throwing in the towel, and it's a little perplexing considering the tight labor market that consumers are spending. Gina Martin Adams still says not an earnings recession.
Yeah, that's a really good point. Let's get an update on world and national news. For that, we turn to Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. The White House is confronting some very challenging economic news. The latest report on the Consumer Price Index shows inflation rose 8.6% in May. President Biden addressed the issue while visiting the Port of Los Angeles.
Make no mistake about it. I understand inflation is a real challenge to American families. Today's inflation report confirmed what Americans already know. Putin's price hike is hitting America hard. Gas prices at the pump, energy and food prices account for half of the monthly price increases since May.
Biden called on Congress to pass legislation to cut prices for shipping, prescription drugs, and energy. The Biden administration is lifting its requirement international air travelers to the U.S. take a COVID test within a day before boarding their flights. The change that takes effect Sunday eases one of the last remaining government mandates regarding COVID-19. The World Health Organization says it needs more data to determine whether a lab leak is what set off the COVID pandemic.
The UN Health Body's advisory panel on the virus's origins has put out its first full report since it formed last October. It says a review of all coronavirus-related activities at the lab in Wuhan, China would be needed to determine the source of the pandemic. They also call for further study of the wet market that's also been named as a potential jumping-off point for COVID. China has resisted efforts to investigate the Wuhan lab's role, but a foreign ministry spokesman says his country has shown transparency and openness. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic here in our Interactive Broker Studio. A lot going on here. Hey, we just talked with Neil Dutta over at Renaissance Macro talking about that CPI print today, and he did see the flip side, and he did take the flip side of maybe how things ultimately play out later on this year. Fed continuing to raise rates, but maybe not so aggressively later in the year.
That was surprising to hear from him, given what we heard from Barclays earlier today, and that people are now thinking about a 75 basis point rate hike. But look, there's two sides to this.
Well, and they might, like right now, right? I can't wait till next week's meeting to see, does the Fed just do something shocking?
Like a 75 basis
point.
Like
a slap.
Like what you mean, like 75 basis points?
I mean, the
market
50's
expected.
Yeah, or do they, I think, again, 1 month report. And if you do look at core, it did come down a little bit. Month over month, right?
It did.
So,
let's talk about food and rising food costs.
Okay.
So Smithfield, the pork giant, is cutting California operations on rising costs. The soaring costs to raise hogs in California are prompting the world's biggest pork producer, Smithfield, to exit the state. Smithfield's going to cease operations at the Farmer John hog slaughtering facility. It's in Vernon, California. It's in Southern California in early 2023 and cut the amount of piglet-producing sows that it raises in Utah. That's according to a statement on Friday. The company exploring options to exit farms in Arizona and California. About 1,800 jobs will be eliminated.
So the move coming as the U.S. Supreme Court is set to review California's Proposition 12 rule that requires pork sold in the state to come from animals that have more, quote, usable floor space. While the law was designed to improve animal welfare, it would also raise costs for hog farmers to redesign or build new barns with more housing space. I'm all for animals.
Housing costs, I want to make a joke about housing prices in California, but I feel like that would not be cool. Soaring animal feed prices since Russia's invasion of Ukraine have also been squeezing livestock farmers, while drought in the western U.S. makes it more expensive to raise animals there than in central U.S. Meanwhile, prices for meat have been skyrocketing, driven by the worst inflation in decades and hurting consumers.
It just feels like a squeeze everywhere, whether it's legislation or rules or what have you. Gosh, it just feels so rough. All right, more to come, folks. You are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market remains near session lows today after that report on retail inflation came in very hot and essentially forced markets to reprice the path of Fed tightening. Consumer prices last month up by a whopping 8.6%. Now, the Fed will meet next week. It's already signaled it will likely raise rates by 50 basis points. Though, after that CPI print this morning, markets are now pricing for the possibility of a 75 basis point hike. That probability is around 50%. If you look at what's happening to the U.S. yield curve, at the short end, the yield on the 2-year Treasury is up more than 23 basis points to 3.04%, a 10-year Treasury at 3.15, the gain there, 11 basis points. In the equity space, we've got the Dow Industrial Average down 2.1%. In the broader market, consumer discretionary, information tech, and financials leading the way lower for the S&P. It's off about 2.3%. The NASDAQ Composite, meantime, down 3%. The move up in rates strengthening the dollar quite a bit, with the Bloomberg Dollar Spot Index rising by 0.8%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. It is the Bloomberg Big Take. It's among our most read. Also a feature in the new issue of Bloomberg Business Week, just out on newsstands, online at Bloomberg.com/businessweek. Also on the Bloomberg Terminal, Tim.
It's all about 3M being at the center of a major political scandal in Belgium. The story by Stephanie Baker, Financial Investigations senior writer. Joel Weber is the editor of Bloomberg Business Week. Joel joins us on the Access line from Brooklyn. Stephanie joins us on the phone from London. Joel, this is all about what's known as forever chemicals, PFOSs. What's going on here?
Yeah, so that category of chemical is one that 3M is among the industrial sort of giants that make. We know it because of some consumer-facing products, things like Scotchgard, that have made use of them before. What makes this story so significant? Some of this stuff has happened in America, and 3M, which is based in Minnesota, has really had significant fights and lawsuits with Minnesota. But what's significant is that same fight is now developed over in Europe. And in particular, as Stephanie reports, the city of Antwerp in Belgium has been a 3M site. And it turns out that even though they haven't been making this class of chemicals since 2002 at this facility, there's a tunnel that's being dug. And it turned out as they started to dig, they found really, really high levels of this category of PFAS chemicals. And that has led to massive infighting in Belgium and could go all the way up the ladder to affecting the whole continent and the EU as a whole. Stephanie, how bad were the levels of chemicals that they found?
Yeah, they were, really bad in terms of, and I think they're still mapping out the extent of the contamination. And I spent quite a bit of time trying to compare it to PFAS hotspots in the U.S. I think this is the worst, if not one of the worst, for this particular class of PFAS. So there's a class of forever chemicals. There's the old long chain versions that were phased out in 2002. PFOA, which became well known because of the film Dark Waters, and the other long chain is PFOS, and that's the chemical that has been contaminating the surroundings of this plant in Antwerp. And I mean, I think the most disturbing thing is they did a study of almost 800 residents and found the vast majority of them had levels of PFOS in their bloodstream that were well above European safety levels. And I think that has caused concern. They're in the process of testing many more people. I think so far they've tested another 5,000. And, it's spread widely around the factory. It's in the soil and it's in the groundwater. And, the significance of this is that the previous Flemish government did a deal with 3M in secret to park a lot of the most polluted soil on 3M's site and didn't tell the public about it. And so it's only come out recently, and that's why it's turned into this political scandal.
Turned a huge uproar, obviously. The other significant thing to mention here is that remediation is basically impossible with this category of chemicals, right?
Well, it's not entirely impossible. You can incinerate it at incredibly high temperatures, but to try to burn the amount of soil that has been saturated with PFAS is incredibly hard and expensive. The other method apparently that they're trying out is growing hemp, because apparently hemp soaks up the PFAS, but then you have to do something with the contaminated hemp. So, it's incredibly difficult to get rid of. 3M, when it phased out longer chain PFAS in 2002, it introduced shorter chain versions to be used in firefighting foams and Scotchgard, these fabric protectors. And they said that they were safer, but scientists now believe they are just as dangerous, in part because they're more mobile. They move further, and they're just as persistent in the environment. So I think that is the real, reckoning that we're facing, that there are a whole class of PFAS chemicals that have not been properly regulated and, only now are really coming under scrutiny.
Gotta say, Stephanie, I feel like, here we are, a secret deal. I feel like I've seen this before with companies who have knowledge of stuff that is harmful to individuals or to an area, and yet there's some kind of deal. In the same time, you detail in the 70s, 1977, 1978, in the 80s, knowledge, studies, things that were known about the impact of these chemicals, and yet here we are, and then you have 3M saying, no criminal behavior. What denotes criminal behavior in this kind of situation? Because, man, we've been here before, and I think many people would say, yeah, that's criminal behavior because there was knowledge.
Well, 3M's response is that, the science on this has evolved, and they still don't believe that it causes health harms in the levels detected in the environment. Many scientists who've been studying this disagree, and I think the issue is, you're right. They knew about this from doing animal studies in the 70s. They reassigned workers of childbearing age because they saw that it caused deformity in rat studies. So they did know about quite a lot that they did not disclose. And I think, they say they're trying to be more open, but I think there's still a lot of room for improvement there. After my story came out, they issued a statement saying that they'd been allowed to restart PFAS production in Antwerp. Well, it turns out it's only one particular line of PFAS production that they were allowed to restart that's used in the production of semiconductors, which is really crucial, and there's a shortage of those right now.
Okay, so that's exactly
that might happen.
Yeah, Stephanie, that's exactly where I wanted to go, because I don't want to give away the whole story, but I was shocked when I got to the end and saw that they were set to restart PFAS production in Belgium. Is this something that, how do they do this in a way that doesn't destroy the environment like it has in the past?
Well, they've been subject to very stringent monitoring by Flemish authorities, who have finally woken up after years of allowing, environmental permits to what looks like to be violated based on the contamination in the environment. So they're strictly monitoring them and running tests, and they believe that for at least this one line, they're able to produce it with the proper treatment facilities so that there is no environmental impact, or there's an acceptable environmental impact. But, they have changed their approach to inspections.
It's an incredible read in reality, unfortunately. Stephanie, thank you so much. Stephanie Baker, financial investigator, senior writer at Bloomberg News, joining us on the phone from London. And, of course, Joel Weber, editor of Bloomberg Business Week on the Access Line from Brooklyn. This story is a feature in the new issue of Bloomberg Business Week, out on newsstands, online at Bloomberg.com/businessweek, always on the Bloomberg terminal. It's also among our most read, and it's also the Bloomberg Big Take. Coming up, we're going to check in with our TV colleagues. We're going to talk about the market sell-off and that hot inflation print. This is Bloomberg Radio.
the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading session, in your trading week. Caroline Hyde, Taylor Riggs. We're joined by Katie Greifeld as Romain Bostic is out for the day. We're joined now by our colleagues Carol Masser and Tim Stenovic. We go across audience as we do each day, TV, radio, YouTube, to look at a 2% drawdown on the S&P and sub, well, 4,000. Carol.
Yeah, absolutely. Maybe a little bit of hope in that we're off our lows of the session in the equity trade. What I find fascinating is what's going on with energy names today, down about 1.3%. I mean, there was no room to hide. But even energy, we had a very hot inflation print. We know that. We saw energy prices and utilities up more than 50%. And I do wonder if starting the thinking of like slower growth or demand destruction, which we've seen in other parts of the market, starting to play in the energy field as well, Tim.
Yeah, Carol, you say nowhere to hide. Even airline stocks not doing so well, even after getting the news that the CDC is set to lift the test mandate for all travelers flying to the U.S. That's not helping to give airline stocks a lift today. They were down as much as 4.5%, now down about 3.4%.
Let's do the majors quickly because we are red across the board. 82 points lower on the S&P, 33,936 is where we trade. We're down by 2.7% on the Nasdaq. That's 317 points lower. You're down by 600 points on the Dow. That's 1.9% lower. And indeed, the Russell 2000, Katie, you're a key laggard too, off by 2.4%.
Yeah, a bunch of red on that screen. I did find one place to hide, guys, though. If you look at the sector level, consumer staples actually pushing a little bit higher, 0.3%. Usually wouldn't say that's such a big move, but if you look across the sectors right now, it is the only one in the green.
I mean, isn't that because, Taylor, they've been beaten up so hard already? I think of Walmart, Kroger, Target.
Well, what's so interesting, we've done great analysis from Gina Martin-Adams, who's been all over this, about such the tiny margins to begin with, that typically they don't actually outperform in some of these inflationary environments. Yes, you would think that a consumer is so focused away from discretionary, away from Netflix, into some of the staples, but actually maybe not. And herein lies the problem. I want to take a look at some of these movers here, Caroline, and I think what's so interesting is some of the big high flyers here, DocuSign, Stitch Fix. We were talking about these stocks yesterday after the quarterly, after the closing bell, when we think about those quarterly results, and then some of the high-flying tech consumer-facing companies like an Apple and an Amazon. How do they fit in a massive inflationary environment?
Amazon, front and center, been one of those companies that's been navigating the supply chain headaches that we talk about, infusing the inflation data in one way or another. And I'm pleased to say that we can dig in to the inflation story that little bit more at the moment. We can go live now to the Port of Los Angeles, where Ed Ludlow is sitting down with, of course, Mario Cordero, Port of Long Beach Executive Director, a friend of the show, an exclusive interview. Please do take it away, Ed.
Yeah, thank you, Caroline, and to our global television, radio, and YouTube audience. We are in the Port of Los Angeles, as you can see and hear from me, but I am joined by their neighbor, Port of Long Beach Executive Director, Mario Cordero. Very simple question to start. What did the president say to you about his visit to the ports and then what he's going to do about supply chains relating to the ports?
Well, Ed, thank you for the invitation. As you know, the president has been very engaged in the supply chain issues, which are global supply chain issues. And what he's indicated basically is, in accordance with his executive order 14017 that he issued previously, you know, he's really addressing these supply issues. This is the nation's largest port complex, and hence we welcome the engagement of the White House, but more specifically the investment in the infrastructure here.
He talks about some of that investment, what's happening here on the ground. He talks about the coordination between Labour Secretary Walsh, Transport Secretary Buttigieg, the main parties. But what is it that the administration can actually do other than write you a check to solve some of the long-standing issues that are going on here?
Well, writing a check is a big step because we've had disinvestment in these ports as opposed to now an administration with investment. But I think what they've been able to do is, going back to collaboration, that has really brought some real focused conversation on things that we need to do. For example, expanding gates. The terminals here have expanded gate hours. You know, for the Port of Long Beach, as you heard me say, my vision's 24/7. So we are thinking out of the box, both in short-term and long-term solutions to the supply chain.
Can I ask you about rail? It's weird because we're here at the Port of Los Angeles and we see these containers behind us, we see the ships. But in every conversation I have, people say, go and look at what's happening with rail. There aren't enough trains, there aren't enough carts. What's your view on that?
Well, sadly enough, there aren't enough cars. And again, that's something that we are putting a high priority in our collaborative discussions with our stakeholders, led by the administration. And frankly, for the nation's largest port complex not to have enough rail cars. I think it's a work in progress. There is a full court press to address this issue, but that's one of the focal points at this point to make sure we get these containers, rail cars, that have been dwelled here plus 9 days for more than what's normal.
We came here to see the president, to listen to the president. We also came to the Port of Los Angeles because of key inflation data, which is high on the agenda. What is your reaction to the inflation print? Container rates have come down since September, but are still well above pre-pandemic levels. What is the read-through of what you see on the ground to what you see in the inflation data?
Well, as you mentioned, the freight rates have gone down, which the good news. We're at an inflation right now year to year at 8.3. I think the Federal Reserve Chairman Jerome Powell, he has a full court press at the board level to make sure we start addressing inflation in a very aggressive manner. Now, last I will say this. This actually represents the strong demand by the American consumer and, of course, the supply constraints that we have. So I think, again, the good news is we have a very stable economy right now, and we have a very healthy consumer demand. We just need to get the supply chain a little bit more fluid, a little more investment, and, again, expand hours. So I think the future, in my opinion, for the supply chain looks good.
Demand. There's this idea that peak container season, it used to be July onwards, pulled forward to June. Why is that?
Well, it goes back to the consumer demand. I mean, the global growth in trade and imports has been eye-opening given the pandemic we've experienced. For the Port of Long Beach, in the first 5 months of 2021, we're up 3.3% over the previous year, which was a record year.
Yes.
So I think what we're going to see now is the peak season that ordinarily we experience around July. It's advancing here to June. Part and parcel, the surge that we're going to experience is because of a lockdown slowdown that we've seen in China because of the zero COVID policy.
I'm glad you talked about that. China, at the same time, we're hearing that the port system, the canal system as well, which is a really important part of that supply chain, was able to be active despite the factory shutdown. They're two separate issues. Yeah. What are you seeing coming out of China in terms of delivery volumes and activity in terms of what's leaving China and coming to the United States?
Well, we've seen the volumes continue, but I think what we're going to see here in the next month or two is a higher number, an accelerated number of volume for the volume that did not come during the zero policy lockdown slowdown. So while it's fair to say that the ports in China were not closed, it's also fair to say that the supply chain there was rather chaotic with regard to the rail and the bus and the labor shortages. So obviously what we're talking about is COVID-19 based. So we're still in in an area of a lot of uncertainty. But the good news is I think as we move forward, I think I'm very confident the supply chain constraints will dissipate here in the United States.
One of those areas of uncertainty is contracts, negotiations between the Longshoremen and Warehouse Workers Union and the PMA. Do you think we get a deal by July 1st? Do you think we see a strike? That word, strike.
I definitely don't think we'll see a strike and or a slowdown. Okay. So I'm very optimistic that what you are going to see is a meeting of the minds by both the PMA and ILWU within a reasonable time. So we are not going to have a repetition of what happened in 2014, which was a prolonged negotiation, as people may remember. So for the most part, again, I think that the cargo is moving here. Together, Port of Long Beach and Port of LA moved 20 million TEUs, and thanks to the labor here of the ILWU for year 2021. We have record months. So the cargo, I can assure you, is going to keep moving.
Mr. Cordero, Port of Long Beach Chief, final question. What is keeping you up at night?
Well, I think it's fair to say that for the last 2 years, the supply chain constraints have been challenging because obviously it impacts the economy. Right. But on the other hand, I think, again, we've done very well. But in light of what's going on in the world, the geopolitical scenarios, Ukraine, Russia, and where that might end up, I think obviously the world right now is in a very sensitive situation regarding security and all that goes along with it.
Mario Cordero, Port of Long Beach, Executive Director, CEO, Chief, thank you very much for speaking to us on Bloomberg. I'll throw it back to all of you in New York.
All right, Ed Ludlow, and our thanks to you for that exclusive conversation. We will be back in less than an hour's time. We'll count you down to the closing bell on this Friday. Our Beyond the Bell Simulcast coverage on radio, TV, and YouTube. We'll be back to talk about the close. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week on radio and also on YouTube. And Mira Cordero, their executive director of the Port of Long Beach, with our Ed Ludlow talking about what's going on. Of course, they are watching in terms of a labor contract, a deal, so concerned about anything that might exacerbate the situation when it comes to our supply chains.
Yeah, the Long Beach Port Chief doesn't foresee a labor slowdown amid talks. Cordero saying that Long Beach is going to see accelerated volume as China reopens. Also, some really optimistic comments from him about the state of the economy. He said that the high inflation that we're seeing represents strong demand from the American consumer, and that we're in a stable economy right now with healthy consumer demand.
I think what's really telling, too, is he talked about Long Beach expected to see accelerated volume as China reopens, right? This has been something that has certainly made it tricky. So much comes out of China, right, in terms of manufactured product. But with the COVID lockdowns and shutdowns, that has certainly impacted things. And so if that starts to ease and we begin to see more volumes, I mean, this is what's made it so difficult for the supply chains.
Well, let's get a check of the latest world and national news. Standing by for that, we have Nancy Lyons in Washington, D.C. Hey there, Nancy.
Thanks, Tim. President Biden is weighing in on last night's primetime hearing on the January 6th attack on the U.S. Capitol. He believes the House investigation will help heal the country.
The rule of law matters in democracies, and we're seeing how the battle for the soul of America has been far from won. But I know together, and I mean this, we can unite and defend this nation, Democrat and Republican.
Biden spoke during a stop at the Port of Los Angeles, where he also addressed today's report showing consumer prices rose 8.6% from a year earlier, which is a 40-year high. Bloomberg's Irv Chapman has more from Washington.
The cost of gasoline has risen 49% in the last year. White House economic advisor Brian Deese said in a Bloomberg interview, inadequate capacity at U.S. refineries is one reason.
The private sector reduced refinery capacity by 800,000 barrels a day in 2020. Refinery profits have hit historic levels. We have made very clear at the CEO level to those companies that we're prepared to take actions, but we need them to take action, increasing investment to bring more capacity online.
Deese said exorbitant rates charged by ocean shipping companies is also fueling inflation. In Washington, Irv Chapman, Bloomberg Radio.
The Biden administration is lifting its requirement that all travelers test negative for coronavirus before flying into the U.S. amid pressure from airlines that had viewed the measure as excessive. They also blamed it for depressing ticket purchases. The change takes effect just after midnight Sunday and will be reassessed by the CDC in 90 days. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. Carol Masser, along with Tim Stenovic, live in our interactive broker studio here at Bloomberg headquarters. You know, Nancy Friedman, one of the things we watch for health of the market is M&A activity and IPO and new issuance.
You don't see a lot of IPOs these days, do you?
Like nada.
Yeah, Nadina Friedman over at the NASDAQ, the company's CEO, saying that the NASDAQ has companies, quote, on file. They're just waiting for better conditions before they tap the public markets. This according to a story on the terminal by our own Catherine Doherty.
I mean, the worst thing you want to do is, bring something to market and, it tanks in its first day, or there's just not the demand for shares.
It's been brutal for companies that even did well after their IPOs, 16 months ago.
Right. And so it makes complete sense. Despite the slowdown in IPOs and a volatile market environment this year, Friedman said the company has other software products, including for anti-financial crime and investor relations needs that contribute to recurring revenue. I mean, this is an important source of revenue for the exchanges.
Oh, yeah. Listing fees are huge. There's a real rivalry between the New York Stock Exchange and the NASDAQ. I spent a couple of years working not for the New York Stock Exchange, but broadcasting from the New York Stock Exchange. And it was pretty incredible to see the way that this organization would try to court private companies to entice them to list there. And they were successful with some, and some went to the NASDAQ, of course, but the rivalry is intense because the fees are big. And also, Carol, sometimes you have companies jump that they've already IPO'd, but they jump from one from one exchange to another.
Right, exactly. It's all ultimately about the money that they can make in this, so it's important. Hey, guys, we're tracking that. We're also tracking the markets, which have come off their lows. Let's get over to Doug Krisner with the Bloomberg Business News Flash. Hey, Doug.
Yeah, we are off session lows, but there's been some heavy selling today, Carol and Tim. We're down about 2.2% right now if you look at the S&P 500. Carol mentioned session low. Yeah, we're about 50 points off of that right now. If you look at what's happening within the overall market, we've got the S&P 500, as I mentioned, down 2.2%. Consumer discretionary, information tech, financials leading the way lower. NASDAQ Composite is off about 3%, and for the Dow, a loss of about 2%. The day began with a very hot reading on retail inflation for the month of May. CPI last month surging 8.6%. This is really forcing markets to reprice the path of Fed tightening. Now, the policy meeting is next week. The Fed has already signaled a likelihood of raising rates by 50 basis points. But today, after that CPI report, a repricing for the possibility of a 75 basis point hike. That probability is around 50%. So this issue of stubbornly high inflation is going to continue to pressure corporate profit margins. Now, Bloomberg Intelligence today was saying analysts are forecasting right now, or what they are forecasting really implies that 54% of companies within the S&P 500 will have lower operating margins in the second quarter compared to last year. If there's one positive as a result of the move up in rates, it's a stronger dollar today. The Bloomberg Dollar Spot Index rising 0.8%. But that two-year Treasury is up 24 basis points in yield. That's a monster move at 3.05%. I'm Doug Krisner. That's your Bloomberg Business Flash.
It really is. Oh, my God. Who'd have thought? Although it makes sense after that print. Hey, Doug, thank you so much. Well, just yesterday, U.S. Treasury Secretary Janet Yellen saying that cryptocurrency assets are a, quote, very risky choice to include in the retirement plans of average savers, and that it would be reasonable for Congress to address the danger. Well, in our weekly crypto segment, our next guest has some thoughts on Bitcoin as a blue chip. Noelle Atchison, she's head of market insights at Jennison Trading. Tim, it's a portfolio company owned by DCG Digital Currency Group, a venture capital company focusing on the digital currency market, founded by Barry Silbert, well known to this space.
It's great to have you back with us, Noelle. Really appreciate you joining us. You're joining us on the phone from Austin, Texas, where you are there for a conference. I want to start with just the price action that we're seeing in Bitcoin today. On a day when we do see widespread selling in U.S. equity indexes, we do see Bitcoin down 4% as well. It's still under 29,000, but it's really been stuck over the last 4 weeks in this really, really narrow range from about 28 to 32, but really around 30,000. When are we going to see some sort of catalyst to move Bitcoin one way or another?
That's a very good question, Tim, and thanks very much for having me. Everything I say is my opinion, not that of my employer. And nothing I say, of course, is investment advice, especially in an environment like this. But yes, a lot of red across the board, and this is not surprising given what we saw this morning in the CPI print, given what we're seeing in the more traditional markets. Although Bitcoin did reach its highest correlation ever to the S&P 500 in early May, that has been coming off notably with the market slump and with the terror implosion. It is still, however, relatively highly correlated, and so what happens in traditional markets is going to impact sentiment in crypto markets. However, your point that it would have been range-bound, hovering below 30,000, it's not really the bear market that I'm hearing everyone talk about. A bear market is a steady grind downwards, which we haven't really seen.
Is part of the problem here, Noelle, though, in terms of correlation and connectivity with other financial assets? I mean, I still don't think the world knows what crypto is.
That's a very good point. I get that question a lot. What is Bitcoin? Because Bitcoin is one of the highest profile, but also one of the more confusing. And my answer is always, actually, it's what you want it to be. And while that may sound very hand-wavy and philosophical, it really is. For some people, it's a risk asset to hold a position in macro portfolios. For others, it's a long-term store of value. For others, still, it is a medium of payment, even though it's not something that those of us in very comfortable Western societies with good financial systems would use. So Bitcoin is many, many things to many, many people. And in my opinion, that's one of the things that gives it resilience. Diversity breeds resilience almost always. And in Bitcoin, not only do we have a diversity of investors, diversity of adopters, and a diversity of potential use cases and investment theses as well.
I don't know, Noelle, because if you think about it from the context of is it an investment or is it an actual currency, doesn't the volatility around it, the fact that it has lost about 50% of its value in just a few months, does that make it so it's less effective as a currency because it's not stable?
Not necessarily, because 50%, volatility is relative, for one, and losing 50% over I forget what time period it is, to be honest, I need my numbers in front of me, but many currencies in the world have lost more than that. So it's relative. For us, perhaps, yes, it's not a good currency. We don't need it as a currency. We have very good payment mechanisms, and for many of us, it is a store of value or a play on technology, or whatever your thesis may be. But for much of the world, much of the world, it is the best currency system that they have, better than their fiat version.
I do, Noelle, we've had so many conversations about kind of where we are in this crypto world and that we need to think about it as the early stages of the internet. And so, you are someone who spent a decade in capital markets, you've run your own e-commerce company that you founded, and then you come to Bitcoin. So where would you put Bitcoin in terms of its maturity and its usefulness versus just a kind of fun trading play?
That's a fascinating question. I would say it's in grade school. It's very young still. And yes, many of us have been following these markets for a long time now, and it may seem like a lifetime because you know the saying that a week in crypto feels like a year because so much happens. But while it has come an astonishingly long way, especially since the last downturn that we had, it still is really young. We still are debating what even it is. We still don't yet have the full regulatory clarity that we need. But the progress is really what matters. And that brings us to another interesting investment thesis of Bitcoin that we're seeing quite a lot. It's a liquid, open access way to get access to a new technology. Normally, this is limited to venture capitalists. But here we have assets that anyone, anywhere in the world, can participate in and bet on what could end up being the operating systems, financial systems, whatever you are interested in, of the future.
Do you agree with Janet Yellen that it's just too early to put something like this in a retirement plan? I mean, come on. I mean, do we even have, Tim, do we really have access to like venture capital or early?
I don't know.
I guess in some funds.
Private equity firms want you to have access, but Fidelity just did announce that you're able to, some customers will be able to actually buy into crypto.
Right,
so,
but we really haven't even done it with private equity, right?
No,
so I'm like trying
despite much to the chagrin of private equity.
Right. So I'm just kind of like trying to understand that, how dangerous this is for investors to be maybe tapping into this for their retirement plans.
Well, here's the reason why investors are generally not allowed to put private equity investment plans. There's no way to be sure that they are getting the information they need. It's actually all about information asymmetry. With new venture companies, normally the information is closely held by the founders and the investors. It's not something that your average retiree could do or your average saver. But with crypto, it's transparent. The information is out there. In fact, there's more information about crypto available to anyone anywhere in the world than even publicly traded stocks. So when you're saying it's too soon, this is something surely that the investors themselves should be able to decide if they have the right information. And the information is there. I think that's what the gate should be doing, making sure that people have the access to the information that they need to make their own decisions of what they can do with their own money, because we know of many investors, and we all know many investors that are concerned about the fiat debasement, are concerned about inflation, are concerned about the global economic situation, and yet to be told that they're not allowed to do what they want with their money, even with all the information they feel they need, is somewhat against the whole spirit of open markets.
Hey, Noelle, I'm wondering, we spent a lot of time talking about Bitcoin specifically, but when it comes to other cryptocurrencies, apart from Bitcoin, what are the other ones that our audience should be paying attention to?
Well, Ethereum is the second largest ranked by market capitalization. It's down a lot more than Bitcoin today, which is very interesting because Ethereum has a very profound technological change coming up, which is going to change many of the fundamentals of the network. And in my opinion, this is my opinion, not that of my employer, is not yet priced in. However, it's risky. Any new technology venture is risky, and the experiment that Ethereum is undertaking is unlike anything we have ever seen before. Changing the motor of its engine while it is operating with billions of dollars riding on it is audacious, but potentially very, very exciting as well. Higher risk in this kind of environment is something that we are seeing investors choose to stay away from. We're seeing a rotation into Bitcoin from many of the higher risk crypto assets, including Ethereum, which is pretty darn large.
Right.
And that is, but it still is an interesting story for people to keep an eye on, simply because of the technological experiment that's unfolding.
All right, we're going to leave it on that note. Hey, Noelle, thank you so much. Noelle Atchison, she's head of market insights at Jennison Trading, as we mentioned, a portfolio company owned by DCG, Digital Currency Group, which is a VC company focusing on the digital currency market that was founded by Barry Silbert. She joined us at a conference in Austin. I do want to highlight in the new issue of Bloomberg Business Week, there's a story by Joshua Brustein. It's about $1 billion crypto game that promised riches and delivered ruin. So it's just, these are the kind of stories that we are hearing in this environment.
It's on page 42, Carol.
Thank you.
Of the new issue of Bloomberg Business Week. I have it in my hand.
I love
right now.
holding a magazine still.
It's all about Axie Infinity. It pitched its crypto game as an engine for economic empowerment. It didn't work out that way.
Yeah, right. And we keep hearing these stories. I like what she said, that Bitcoin is like being in, it's kind of a grade schooler. I will say, a great conversation, interesting. I'd say download the podcast and play it back at a lower speed because she was fast. I know she had a lot to get in there.
I think she's at Consensus in Austin, and there's a lot to do in Austin at that crypto conference. She joins us a lot on Quick Take from the UK.
Does she?
Yeah, she's great.
All right, well, good to know. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. And so we've been doing some really big macro conversations. We've had to because of the news flow and what's happening with the markets. But let's not forget.
Yeah, there's also some interesting stuff happening at some companies. I was going to say small companies, but no, some big companies too. Talk about an executive shakeup at Disney. We're going to get the skinny on that with Chris Palmieri, the entertainment editor at Bloomberg News, in just a minute. First up, though, Doug Krisner. We got less than a half hour to go. Things looking any better?
Not really. Maybe a little bit. We're off session lows, but Carol's absolutely right. The macro is in focus today on a day when you get a very hot reading on retail inflation. CPI in the month of May up 8.6%. So markets now have to contend with a repricing of the path in Fed tightening. That Fed meeting is next week. The Fed has already signaled it's going to raise rates by 50 basis points. So now the discussion is on the possibility of a 75 basis point hike. Barclays saying today that's what the firm is betting on. The probability, though, if you step back and look at what the market is saying, is only about 50% chance that we're going to get a 75 basis point move. That would be very aggressive. We've got a 2-year Treasury now up nearly 25 basis points in a single day, 3.05%. Weakness in stocks across the board, off session lows. The S&P 500 down 2.1%. NASDAQ comp off 2.8%. The Dow down 2%. I'm Doug Krisner. That is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Well, yesterday, some really interesting news for people who follow Disney closely crossed. The Disney chief fired somebody who has been in charge of television at the network, surprising many people who've been watching the company closely. And it only took, Carol, 7 minutes for him to do it.
Yeah, absolutely. I love this story, and I'm glad we're going back to our Chris Palmieri, entertainment editor at Bloomberg News, joining us on the phone in Los Angeles. Chris, we've had some time to think about it. You've had some time to report on it. How are we supposed to see the firing of Peter Rice? Like, what does this mean? What's going on inside the hallowed halls of the Magic Kingdom?
Yeah, much to process here. On its face of it, this was an executive, very accomplished executive, rose up through the ranks at Fox, ran Fox Searchlight, their sort of art house film unit, won Oscars, did some of the TV shows that we've all watched and loved at Fox, Modern Family, on and on, and so. Then came to Disney and just was not able to make that transition. Disney's a very different corporate culture, a lot of consensus building, and that's a situation that's really been exacerbated under CEO Bob Chapek, who's a 30-year Disney veteran. He reorganized the whole company a couple of years ago so that even the creative executives don't have the power to approve a new TV show or movie. That all goes through this other sort of distribution arm that makes all the decisions about whether to make a TV show, what channel it's going to be on. And apparently for somebody like Peter Rice, who was used to making these decisions on his own, was just not fitting in that corporate culture.
Well, what surprises me, though, Chris, is that he lasted a couple years under Chapek, given the fact that this reorg happened a couple years ago. I mean, if you think about this in the context of what we see from other media companies, David Zaslav coming in and making big changes over at CNN in a very short period of time, in a sense, is it surprising that he was expected to become he was one of the contenders, as you write, to become CEO. He obviously did not become CEO, but we've seen other executives depart way sooner when they don't get the top job.
Well, there's other things going on, and this is sort of the opinion of some people who are familiar with the company. So Bob Chapek, the CEO, is not having a great year. He's had a huge PR debacle in Florida with the schools bill there, and the company just becoming a punching bag for conservatives. And the stock is down by more than a third this year. The whole disenchantment with the streaming business at Netflix and throughout the whole industry is hurting them. And Chapek is sort of, although he's been in the business so long, is not a Hollywood insider. He isn't beloved by the creative folks. He had that blow up with Scarlett Johansson last year as well. So he is sort of in trouble, and there are certainly people who will read this as him eliminating a potential successor if the board wanted to name somebody quickly to replace him. Now, the other interesting thing that happened yesterday was the board came out and said that JPEC has their full support. So in a way, that's even more significant than the dismissal of Peter Rice is the fact that Bob JPEC isn't going anywhere, at least, in the near term.
On a day when we're, constantly talking, Chris, about peak inflation, blah, 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 I'm like, peak Disney? And I also can't help but think about, God, if I'm, at the Columbia Business School or Harvard Business School and I'm teaching a class and I'm going to talk about Disney, like, I feel like Bob Iger, what did he know in terms of that timing, right? Like, when he left, because it just felt like all of a sudden so many things have been happening at this company.
Well, there's a history to this that Iger renewed his contract 4 times to stick around, and in the process eliminated a lot of people who were considered, potential contenders to replace him.
Yeah.
And in a way, this is sort of history repeating itself.
That's Iger calling you, Chris. He's got some insight.
Sorry about that.
If it actually is, you can go.
Just
but,
put him on. No, just roll him into the conversation.
Yeah, so there's a lot going on here for sure. Always a very sort of Shakespearean drama at the Walt Disney Company.
So what is still the bread and butter of Disney? Is it streaming? Like what as we as investors and our Bloomberg audience, what is the bread and butter?
Well, the really interesting thing is the growing importance of the theme parks. They've always been a nice, profitable business, but it's really become very important this year because what's happening is the traditional TV business is still spitting off cash, but it's not growing. You think about ABC, ESPN, and all that, and they're investing billions of dollars in the new streaming businesses, and so that's sort of covering that. And the movie business is not doing well. We're just now starting to see people going back to theaters. So it's really the theme parks that have become such an important part of the profits of the company. And they're, JPEC used to run the parks, and there's 2 schools of thought. I mean, from a business standpoint, they're doing great. He's found all these new ways to generate more money from theme park goers. If you're a person who goes there, you're like, wow, I'm getting nickel and dime everywhere I turn. So and that really is the essence of JPEC. A businessman probably will be successful in the long run, but not beloved.
Yeah, I know some people on our team here who've talked about their experiences at Disney. They shall not be named, but saying, hey, last time I go there, given what I was having to pay for every single thing. A big thank you, Chris Palmieri, entertainment editor at Bloomberg News, joining us on the phone from Los Angeles. So you think Iger comes back, Carol?
Oh, gosh, no. But
there is some chatter about that.
Is there?
Yeah, I mean, it's just people tweeting about it.
So rather than it's a small world, it's a large bill after all.
That's good.
I got to say, I've been to the theme parks and I loved it. And I know it was expensive, but I had a blast a few years ago.
Let's get to Washington, D.C. now for Check Latest World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. U.S. inflation is at a 40-year high. The Consumer Price Index for May increased 8.6% from the same time last year, with housing, food, and gas the largest contributors to that increase. President Biden says inflation does remain a top priority for his administration.
I understand Americans are anxious, and they're anxious for good reason. I was raised in a household when the price of gasoline rose precipitously. It was the discussion at the table. It made a difference when food prices went up.
Biden says the higher prices are largely due to Putin's war in Ukraine, but he did urge Congress to take steps to lower prices on prescription drugs and energy. The House panel investigating the January 6th insurrection at the U.S. Capitol is laying the blame firmly on Donald Trump. During last night's hearing, they said the assault was not spontaneous, but an attempted coup and the direct result of Trump's efforts to overturn the 2020 election. Bloomberg Washington correspondent Joe Matthew.
Republicans call this effort illegitimate and unconstitutional. They are not buying this, but members of the panel, including 2 Republicans, Liz Cheney and Adam Kinzinger, say they will prove coordination, if not conspiracy, to overturn the election. And they say it all began with a White House meeting December 18th. Donald Trump, Rudy Giuliani, Sidney Powell, and Michael Flynn all in one room.
Bloomberg Washington correspondent Joe Matthews says about an hour after that meeting, then President Trump sent the tweet inviting people to come to Washington, saying it would be wild. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, you are listening to Bloomberg Business Week. Carol Massar, Tim Stenovic, live in our Bloomberg Interactive Brokers studio, and we are streaming on YouTube. A story that we do want to mention, a couple of them actually, and I think Nancy's been talking about that. CDC to lift test requirement for travelers entering the U.S. I got to say, I saw this. I was talking with
a lot of people breathing a sigh of relief.
I had to do it when I came back from Panama for work for Bloomberg, and we were part of an event, so there were things set up. But I was coming back in a later date, so I had to work with the hotel to bring somebody in, and out of pocket paid for it and stuff. And it wasn't crazy, but there are people who are paying tons of money for these tests.
It was such a headache. It took a whole morning away. I had to do this on the way back from Canada. I was skiing with my friends, and we had to just figure out how we were going to get tested
on the way back.
What did you do? I brought a bunch of rapid tests and thought that would work because they said antigen tests. The rapid tests are the ones that are accepted at the border.
Yeah.
I didn't buy the right type.
Did you not do the one with the virtual where you have to
You
call a
need
doctor?
We called the doctor,
Oh, you
and we were
did?
on with the doctor, and she was like, "You can't. These aren't approved for it." So we all made appointments at the airport. I go to the airport and pay $100 or whatever to do it, and then they don't even look at the results when I get on.
Are you serious?
I'm totally serious. This is back in January at the height of Omicron too. I was like, "It's right here. Please just look at it." It was $100. Please.
That hurts.
Yeah.
I know people who are thinking about traveling, and I was talking to a friend of mine, and she's like, I don't really want to go overseas because I got a test to come back. So I do think this will open up people thinking about going outside the country.
Maybe it was 100 Canadian.
So what does that mean in U.S.?
Less.
What is the Canadian dollar worth?
It was less than the U.S.
Is it a
but
loonie?
It's a loonie, yeah. But it was still a pain. So, and it's interesting not seeing airline stocks move significantly higher on this.
Yeah, that is.
Because it should increase. Because demand has
Yeah.
come back in the U.S., but international travel really hasn't because of COVID.
Well, and who is it that we talked about? Neil Dutta, right? Talking about travel and airline tickets and everything's expensive because people want to go places,
And
right?
the pilots are out.
And the pilots are out. It's a little tricky. I mean, I just think about how much traveling you and I have done in the last 6 weeks or so, or 8 weeks, and it's been a lot.
We got more next week.
We have more. Yep. We're getting our cowboy boots and our cowboy hat on, and we're heading to Texas.
We're going to bring some oil back.
We are.
Yeah.
Try to get that on the plane. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Cue the dramatic music, because it's a dramatic day in markets, right? We had the retail inflation data that was a very hot reading. Consumer prices last month jumping 8.6%. So the market now is trying to reprice the path of Fed tightening. We've got a policy meeting next week. The Fed has already signaled an intention to raise rates by about 50 basis points. But today, markets have been forced to consider the possibility of a 75 basis point move. Barclays is making that bet. But if you look, generally speaking, at what the market is suggesting, the probability of a 75 basis point rate hike is about 50%. So we're about 12 minutes away now from the closing bell. It looks like we're weakening. Whether we're going to make a run at session lows, I don't know. S&P at the low point of the day was right at 3,900 even. We're at 3914. The loss is about 2.6%. The Dow is down 2.4%, and the NASDAQ composite very hard hit today, weaker by about 3.3%. So stubbornly high inflation, as we know, is going to put a lot more pressure on profit margins. Bloomberg Intelligence today saying analyst forecasts suggest that 54% of the companies within the S&P 500 will have lower operating margins in the second quarter compared to last year. Look at the move up in rates. On the short end of the curve, a two-year Treasury up 24 basis points to 3.05%. That's strengthened the dollar. Bloomberg Dollar Spot Index rising 0.8%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
China suffered a rare diplomatic setback the other day when 10 Pacific Island nations deflected its offer of a trade and security deal. However, the rebuff won't end China's efforts to exert influence over this strategically vital region. To head off further Chinese expansion, the U.S. will need to demonstrate that it can meet Pacific Islanders' needs better than China can. The first step must be for the U.S. to swiftly conclude negotiations over assistance to the Marshall Islands, Micronesia, and Palau. Just as important, the U.S. should work with partners like Australia and Japan on a comprehensive strategy for the region. A good plan would include infrastructure development, trade incentives, and efforts to address issues like illegal fishing. That would allow the U.S. to promote the welfare of the Pacific Islands while keeping a close eye on China. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left in today's trading session. We are off our best levels of the session. We are off our worst levels of the session. But in the last hour or so, we have seen stocks move a little bit to the downside here. So let's get to it with Amanda Gotti. I wonder if she had to price the 12 days of Christmas today, how expensive it would be.
Oh, that's a good question.
Right?
She's Chief Investment Officer at PNC Asset Management Group. She joins us on the phone from Philadelphia. The reason Carol mentions that is because Amanda often does join us each and every year around the holiday time to talk about the way that inflation has affected I was going to say,
what?
Golden rings. I don't even remember all of them. But the way that inflation has, it's not the time of year, right? It's too warm outside
Ladies
to think
dancing.
About that. But
Birds
inflation,
leaping.
Amanda, is certainly top of mind here, despite the fact that Carol's trying to push me off course with singing some holiday tunes. How are you?
I'm doing well. How are you doing?
We're doing okay. We're trying to figure out, when we're going to hit peak inflation here. When do you think we're going to hit peak inflation? Because it obviously didn't happen in March.
Well, we thought it was going to happen with the reading that we got this morning. So it's anybody's guess. We definitely hit a new high. Super frustrating and tough to really see anything positive about this report, given where headline inflation came in, even core missed expectations. It came down a little bit, but it's hard to claim any kind of victory around that. So we thought, we would see the stabilization, but at a high level, right? We didn't think that we were going to see a massive drop here. But we clearly have a bit further to go before we get to that stabilization.
You know, Michael McKee did say that, though, we are seeing some demand destruction when it comes to housing. If you look at some of the home sales data, we're seeing a little bit, too, in some other areas, but it is taking a while to come down. Tim and I laughed, but painfully so, Amanda, of checking our 401k. We're like, we're not going to do it. We're not going to do it. I know. I haven't pulled it up in a long time. So you've got to make investment calls and put out strategies and protocols. So, you know, what do we do in this environment? I mean, we've talked before, it's about capital preservation, but it just feels like at this point, is it too late? And, you know, what do you do?
Well, so we've seen a lot of multiple compression this year on a year-to-date basis. I mean, everything happening this cycle since the onset of the pandemic is happening at warp speed. I don't know about you, but I certainly have investor whiplash. And so this valuation multiple compression on a year-to-date basis has been a real story. What's interesting is that the underlying fundamentals haven't started to crack, haven't started to break down yet. And so we have this real arm wrestling match going on between a lot of concern around, you know, that R word, that recessionary scenario looming large here, but we're still very much in a slowing expansion and positive stage of growth. And so we've been making changes at the margin. We've been trying to bring portfolios closer to kind of strategic targets. In this high volatility regime, it doesn't pay to be really far outside the bounds or out on the wings from a bet perspective. And we've started to take some credit exposure out of fixed income portfolios to get prepared, but we haven't seen the fundamentals in credit markets break down either. So I think the message is really to start taking some proactive steps to get prepared. But it doesn't have to be alarming. It doesn't have to be all in one shot. It can be more methodical over the course of the summer.
Because fundamentals in credit markets, you say they haven't broken down yet, but you said should we start taking steps because they will?
Because we do think that so we're in a slowing expansion phase, right? Later innings here. We do think at some point in the future, we will start to see a recessionary environment come into the equation. It's not our base case for this year. It's a third or so probability of happening in 2023. But I think it's prudent from an investor, you know, and portfolio positioning perspective to be really realistic about where credit markets are. They've been really strong relative outperformers versus investment grade core fixed income exposure. And so we're selling effectively some of our winners there to kind of get ready for what might happen next. Usually credit markets are like the canary in the coal mine, where we first start to see the signs of a fundamental breakdown. Not there yet, but I think it's prudent to start taking steps to get prepared for it.
You said the recession's not your base case, at least this year, and not in 2023. How are you factoring in the odds of a recession?
Well, our economics team thinks it's about a third, 33% probability for next year. We're looking at about 3% growth for this year in the U.S., about 1.5% for next year, and then sub 1 for 2024. Now, what's going to certainly change the dynamic is how hawkish, how aggressive the Fed feels like it needs to get based on what we see in terms of the inflation reading that came out this morning.
Well, what do you think about that? I mean, how much more aggressive is the Fed going to have to get, given that we saw the hotter than expected print?
We were expecting 50 bips as a foregone conclusion for June and July, and 3 25 basis point hikes into the end of the year. Another 50 has to be on the table. We're not in the 75 basis point or more camp all in one shot, but you definitely have to think another 50 is part of the equation here, and that's what the market's recalibrating for.
All right, where don't you want to be? No doubt about it right now.
Where don't I want to be?
Yeah.
I don't want to be in really aggressive exposure. So I would say, in general, staying away from very, very growthy, very, very high valuation and non-earning names. So like meme stocks that lean, far, far growthy end of the spectrum. Those are the areas that I think have really taken it hard here on a year-to-date basis. I think there's another significant leg down for those areas. So we're definitely leaning much more quality, much higher in the market cap spectrum, and definitely more U.S. oriented over international.
Do you like consumer staples? Just very quickly, which is an outperformer today and all week. Very quickly.
We do like staples. It's a very defensive play, but it's not table pounding cheap at these levels.
Oh, all right. Nice. Some perspective. Amanda, thank you so much. Amanda Gotti, she's Chief Investment Officer at PNC Asset Management Group, joining us on the phone from Philadelphia. We've just got a few minutes left in today's trading session. We're definitely off our best levels of the day. It's been a down day, off our worst, but still down 2.7% on the S&P 500, down about 2.5% on the Dow Jones Industrial Average, and the NASDAQ, right, once again, Tim, we see it taking it on the chin, down about 3.3% as we speak. All right, time to head over to our TV team for Beyond the Bell, live on radio, TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Katie Greifeld in for Romaine Bostick. Counting you down to the closing bell and help to take us beyond that bell with a global simulcast. It is Carol Masser, Tim Stenovic, bringing together Bloomberg TV, radio, and YouTube audiences to really delve into what has been a dramatic day for economic data and now for the market, Carol.
Yeah, a lot of drama, Caroline, no doubt about it, right? Here we are pretty much just off our lows of this session, but it's been down all day. Looking for some outperformance this week, this is the safe plays, your consumer staples, whether it was a Kraft Heinz, a Kellogg, a Campbell Soup, Hershey. Basically, the premise is you still got to eat in any environment. And so that's where we saw certainly investors thinking and going into a lot of those defensive plays, Tim.
Yeah, we just spoke to Amanda Gotti, the Chief Investment Officer at PNC Asset Management, and she said what you're seeing with today's sell-off is absolutely the market recalibrating what the Fed is going to do. Before we got that hot print, she was expecting a 50 basis point hike for June and July. Now she's saying another 50 has got to be on the table, but she is not yet in the camp of 75 basis points.
Isn't it amazing that it was just a week or so ago, Taylor, we were all talking about, and Katie, the September pause.
Yeah.
Now, well, that's been totally put to bed.
That seems like a very distant memory, and it's just amazing, I mean, how quickly markets really latched on this idea that we could see a 75 basis point hike. I mean, I think it was Jefferies, Barclays that came out saying that that could happen next week.
Oh, yeah. Well, Jeremy Siegel, don't even get me started on his comments this morning. Of course, you know him at the Wharton School saying that just come out and do 100. And I think what is so interesting, Carol, is whether you do 50 in June and 50 in July, BMO Capital Markets saying the effects of these, of rate hikes, are still lagged. You're not even going to feel that until the fourth quarter. Why not just come out and do it?
Yeah, absolutely. I mean, everybody's just getting so aggressive because so worried, Taylor, about that hot inflation print.
We are, of course, getting these closing bells. Let's get right to it. It is the end of a week and sort of wrapping up the first 10 days of June, and it has just been another ugly week. I believe we'll come out with some of the soups here, but looking at one of the worst weekly losses in the S&P going back since January of this year. We'll wait for these numbers to settle, but again, looking at some of the worst 2 days that we haven't seen in the S&P going back in about 2 years as well, almost to the date, June 11 of 2020. On the intraday basis, though, the numbers sort of accelerated from the big losses that we had, Carol, going into the closing bell yesterday. You're looking at an S&P that closes off about 117 points, 3,900 on the dot, off about 2.9%. A Dow that's off about 880 points. We do that because we're deeply getting into triple, maybe four digits. So we do points for you here, off about 2.7%. And a NASDAQ in a tech sector that continues to be the massive underperformer yesterday. That trend continues today. You're off 3.5% on the NASDAQ and the NASDAQ 100. A Russell, though, that, well, it tries to close in somewhere in between. You're off about 2.7%, but really some significant selling as we continue to think some of these big 2-3 day losses here.
All right, you know I like to do with Romaine, what's the worst performing or best performing name in the S&P 500 this week? Let me put it to you, Taylor. What do you think it is?
Oh, I don't know. Now I don't have time to cheat and to look.
All right, J.M. Smucker, up 4.6%. I mean, it was all these kinds of names that were atop the list for the S&P 500, Katie, this week.
Well, Carol, sadly, I don't have any green bars to show you, everything in the red. But to your point, I mean, you did see sort of those types of names even outperforming today. Food and beverages got very close, but sold off into the close, down about 0.2%. That's your best performer on the sector level today. If you look at what took the most beating, you have retailing, banks, tech names down there too. All 24 of your industry groups in the red. Carol, nowhere to hide.
Yeah, nowhere to hide. It was a little tough to find some gainers in today's session, but thank you very much. Those Chinese names that trade in the U.S., which I talk about so much. Well, Pinduoduo, PDD is the ticker, was up as much as almost 9% in today's trade, still holding on to about a 2% gain by the end of the year. I mean, it's up more than 100% since mid-March. This was number one in the NASDAQ 100, and JD.com, NetEase, also these Chinese ADRs that trade in the U.S. really atop the NASDAQ 100 today. Hershey, I mentioned it earlier, up about 1.9% in today's session. It's up roughly about 10% so far. So again, investors hiding in a bunch of those food stocks today. And then I wanted to mention a mining name. This was top in the S&P 500. Newmont Mining up 3.5% in today's trade. Stock is up about 6 to 7% so far this year. So that's where you see some of the investors moving today and really for the year overall, Tim.
All right, you got the gainers, Carol. I got the decliners, no shortage of them. Starting with Illumina, the gene sequencing company, the biggest decliner on a percentage basis in the S&P 500, falling 9%. Shares falling after the company's CFO announced yesterday after the market closed, Sam Samad, is leaving to join Quest Diagnostics as its CFO. It was a surprise to investors. Stock hit a 52-week low today, down more than 60% off of its August highs. We also got information tech among the worst performing sectors today. We saw shares of Apple fall, Nvidia, Adobe, AMD, PayPal, Qualcomm, and more. Those higher yields hitting tech and growth stocks. Also, don't forget what happened last week with Microsoft. The company said that it was cutting its profit forecast for the second quarter. It blamed a surging dollar. So a dollar gaining strength, not actually helping that company, down 4.5% today. And then Revlon shares falling today more than 52%. Yeah, it's just massive. It closes 53% lower in its biggest one-day drop on record. The cosmetics company falling after the distressed debt news outlet Reorg reported that the company is prepping to file for bankruptcy. The company could file as soon as next week. Revlon shares were halted multiple times today over volatility, and they hit their lowest ever.
That really is a company that's been trying to reorganize debt for a while. But let us, for a moment, keep back a minute. Take this in its all full glory. Our radio audience, I'm looking at global macro movers. This tells you what the day's been like. It is a sea of red. The only place that is green is the US dollar. And Tim, you were just talking about the impact of a strong dollar on one of your companies. Up, strengthening 0.8%. This is inflation right here. This is a Federal Reserve that's going to have to go hawkish as soon as next week. This is, of course, therefore, a British pound that is weaker to the tune of 1.4%. The euro weaker by 0.9%. We're seeing really just every major currency fall across the board. The yen tried to get a little bit of a bid because it's the haven of choice as well, but really this was a dollar-strong kind of a day. It meant that a lot of your commodities fell as dollar goes higher, commodities come down. We worry about the overall growth story as we start to see central bank after central bank have to slam on the brakes. So we see metals fall. In fact, you see, of course, the only real outperforming commodity space was gold. That was your haven amid the inflationary angst. And of course, oil trimming its overall gains on the week as oil pushed back a little bit on the day. And then sovereign bonds, extraordinary moves again in Europe with a 27 basis point move for your Italian 2-year. Your Greek 5-year up 32%. We are 32 basis points. We are worried about peripheral debt. But what a move in US yields as well, Taylor.
Yeah, certainly unbelievable. I'm going to focus here on the front end of the yield curve. That's really where all the interesting action was. You're up 25 basis points on the day. You're up 40 basis points on the week, which means, Carol, that you just had a 2-year yield have its biggest weekly move higher since 2008. That is a massive repricing for this market, for a Federal Reserve that is maybe well behind the curve. As you think about 50-50-50 that doesn't get it done, markets increasingly looking at maybe 75. You got a little bit of action in the belly when you think about the 5s and the 10s. You're up 19 basis points on the 5-year, 11 basis points on the 10-year. Those are just daily moves. So this is a bond market that is undergoing a significant repricing when you're thinking about what is fair value with a Federal Reserve that's behind maybe stagflation and, well, massive inflation.
Right. This repricing is really important. So is this it? Do markets settle down on Monday, Tuesday, wait for the next Fed decision and direction from Jay Powell and company, right? We do get a read on the retail sector as well next week. And I do think about that consumer sentiment number. I mean, consumer sentiment today down so much. And I do wonder, when does consumer spending stop? When does the labor market start to come undone? Because everybody we seem to talk to kind of reminds us consumers still spending. They continue to spend, right? The labor market's still strong. Katie,
Well,
like,
that's
so,
what the Fed is trying to engineer with these terrible consumer sentiment numbers we're getting. It's not yet impacting spending. The consumer is still spending. That's still keeping some fuel under inflation. That's what needs to change. Demand needs to cool.
I've got a little anecdote about how important the Fed is to people right now. I got a text from my sister earlier today, and she mentioned the Fed meeting next week.
What?
I had no idea my sister even cared about what the Fed does. She doesn't work in finance, and she is paying attention to what the Fed is going to do.
What'd you tell her?
I said, I have no idea what the Fed is going to do. We have to, of course, wait until Wednesday.
But you didn't say 50 basis points, of course, and call me when it happens?
Yeah, exactly right.
but did you tell her she's selling a house, right?
Yeah, and she said she's paying attention because she's, selling a house right now, and it's, the market has certainly cooled off quite a bit.
I think the bigger issue, too, is sort of the delayed reaction that we've gotten from this Federal Reserve. And I mentioned this earlier, that the rate hikes that we're getting next week, July, those aren't going to be felt in the headline in the markets. You see it immediately. But within the economic data, how long it takes to filter them through the system, you're not going to feel those effects until the fourth quarter. Now, that's according to BMO Capital Markets. But you can't just put the toothpaste back into the tube. It comes out quickly, but unwinding all of that takes so much longer than we think. And that is sort of the further calls that the Fed has to move a lot faster.
And there's a lag on the other side, too. When we do hit that recession, they inevitably take rates down to zero. At what point does that actually start to make things feel better in the economy? Probably getting ahead of myself.
QT hasn't even started.
June 15th.
That's huge.
All right. I asked Michael McKee if he was depressed a little bit. I don't know how depressed you guys are, but this is rough economic data.
Mike's doing okay. He loves this
More
data.
people can now perhaps fly a little bit easier in and out of the United States, so I took that as my one.
But it's going to cost you.
Right.
Yes, 376% increase on your airfares from the 3 months to May versus the 3 months before.
Good luck getting a flight and paying
376.
for it, right? All right, guys, have a good and safe weekend. That's going to do it for our cross-platform coverage, radio, TV, YouTube, Beyond the Bell. We will see you again, same time, same place on Monday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Do you feel bummed out? What?
I was just, you can't see it, but my headphones were all tangled, and I was like, I can't get my headphones back on. Frantically. It's okay, I'm here.
He's there. All right, let's get to World and National News. Over to Nancy Lyons. She is in D.C. Hey, Nance.
Thanks, Carol. The price of gas, food, and most other goods and services in May jumped 8.6% from last May, rising inflation to a new four-decade high. President Biden today visited the Port of Los Angeles and pointed to improvements in supply chain bottlenecks that have contributed to inflation.
The president assailed profiteering at the expense of the American consumer.
Every once in a while, something makes you viscerally angry. There are 9 major ocean line shipping companies that ship from Asia to the United States. They form 3 consortia. These companies have raised their prices by as much as 1,000%, raking in $190 billion in profit.
The president said he's doing all he can to moderate the cost of food and fuel, noting that the prices of other goods and services are moderating. In Washington, Irv Chapman, Bloomberg Radio.
Former President Trump is blasting the first public hearing held by the January 6th Select Committee. He calls it the Unselect Committee of Political Hacks. But Bloomberg Washington correspondent Joe Matthews says the committee's presentation last night included clips from Trump insiders.
The committee shared clips of former Attorney General Bill Barr telling Donald Trump that claims of fraud were BS. He used the actual word. Trump's daughter Ivanka saying that she respected and believed the AG. We saw Jared Kushner as well referring to the White House counsel's threats to resign as simply whining.
Bloomberg's Joe Matthews says the next hearing will be held Monday. You can hear more with Joe today on Bloomberg Sound On right here on Bloomberg Radio at 5 p.m. Wall Street time. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So a couple of stories when it comes to real estate that we wanted to mention to you, because we're going to talk about that in depth in just a moment. Story by our Prashant Gopal. He says luxury home sales, he reports, in the U.S. are sinking as inflation, economic uncertainty, and the stock market slump push wealthy buyers to the sidelines. Biggest drop was New York's Long Island.
All right, he's got the data here. So in the 3 months through April, sales of high-end homes in the U.S. fell 17.8% from a year earlier. It's the biggest drop since the start of the COVID lockdowns. That's according to Redfin. They said that Friday in a report that measured the top 5% of listings in each of the 50 large metro areas. Non-luxury transactions slipped just 5.4%. That's according to the brokerage.
All right, so Nassau County, New York, so we talk about the Hamptons and all that good stuff, down 45% for the 3 months ending April 30th. Oakland, California, down 35%. Dallas, Texas, we're going to be just outside Dallas next week for Pershing Insight. That's down about 33%. Austin, down 33%. West Palm Beach, Florida, down almost 33%.
When is New York City going to be on this list?
I know.
We haven't seen
the story about rentals.
We haven't seen these declines hit the New York City area. Like, yes, we've seen them hit the suburbs.
Yeah.
But we haven't seen it hit the boroughs.
Wait, because people have come back to the city?
Yeah.
Wait, I thought that wasn't happening.
It's happening. Even if they don't have to be in work 5 days a week, Carol, they're still coming back.
We're going to talk about Florida real estate in just a moment. A fun story, interesting story. Amanda Gordon and Nathan Crooks writing about Wall Street's move south, crowding Florida's elite private schools.
Yeah, this is a really interesting one. So as firms like Blackstone and Goldman Sachs boost their presence in the state, top academic institutions are facing huge demand pressure. You said Amanda Gordon and Nathan Crooks, right?
Yeah, I did.
Yeah, they're fantastic when it comes to stories like this. Enrollment at 15 private schools on South Florida's eastern coast is up 14% on average over the past 2 years, compared with a 1.7% increase across the country. That's according to the National Association of Independent Schools. The parents coming in are able to give big, though one gift stands out as the largest ever to a U.S. pre-K 9th grade class.
I mean, we're talking about tons of money. Anyway, Great read. Check it out. The gift you were talking about was $18 million. All right, we're going to talk more about real estate.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market fell today quite a bit. We finished at session lows. The S&P 500 closing at 3,900, pretty much right on the money after losing 2.9% today. If you look at the overall market within the S&P, you can see, as I look at my WEI function on the Bloomberg terminal, consumer discretionary, information technology, financials out in front of this decline. The culprit here was a very hot reading on retail inflation for the month of May. CPI last month surging 8.6%. So you get a number like that, you're a participant in the market, you have to reprice the path of Fed tightening, right? We've got the Fed meeting next week. We know that policymakers have already signaled their inclination to raise rates by 50 basis points. With today's number on consumer price inflation, now we have to consider the possibility of a 75 basis point move. Market is assigning a 50% probability to that fact. Today, at the short end of the yield curve, the 2-year Treasury was up in a single day 25 basis points, 3.06%. Dow Industrial Average gives back about 2.7%. S&P 500 down 2.9%. NASDAQ comp off 3.5%. Aren't you glad it's the weekend?
Oh, my God, Doug. I am so,
Forget the closing bell. It's happy hour.
Put the gates
Not
on.
yet.
Close the store, guys.
Wait,
We're done.
Are you guys drinking and I'm not?
No, not you.
Sorry, Tim. All right, Doug, thank you so much. We want to get to our next guest. She was named the #1 national agent at Douglas Elliman, some $750 million in sales volume last year alone, deals in and around Miami Beach, Bal Harbour. Am I saying it right? Bal Harbour? I don't know.
I'm shaking my head.
She's going to help me with this. And we're going to get into a look at really real estate overall, and in particular, Florida.
Dina Goldentear is Executive Director of Sales at Douglas Elliman. She joins us via Zoom.
I'm thinking of Maine, right?
From
Bar
Miami
Harbor.
Beach. Bar
That's
Harbor.
right. Yeah.
Dina, how are you?
Great. Thank you so much for having me.
Yeah, it's good to have you with us. Well, help us understand what the market's looking like, because we did just read that article by our own Prashant Gopal talking about how we are seeing a decline in sales of homes in West Palm Beach, Florida. So just give us an idea of what you're seeing.
Sure. So the market that I specialize in really is the Miami Beach marketplace, which is pretty much our American Riviera. What we have seen the last 2 years has been uncharacteristic because people couldn't travel. So rather than going to Europe or to Aspen or to the Hamptons, we had some of the wealthiest people in the world quarantining and hanging out in Miami Beach. So we had this nonstop flow of activity, whereas usually things do slow down for us in June, July, and August. And then everyone starts trickling back down for fall. So I am hoping that the slowdown that I'm seeing here is the reflection of that time-tested pattern and hopefully not much more.
Well, yeah, so that's what we're trying to figure out. What is the financial market? So much, we talk about it, Dina, all the time. We just talked about how some of the elite private schools in Florida are getting crowded because so much of Wall Street has gone to Wall Street South down in Florida. Trying to get an idea of, is there a slowdown, though, because of the financial market impact and people, I don't know, you've seen a lot of cycles. What's your expertise telling you?
I mean, I'm naturally inclined to be an optimist, so I'm hoping that, again, it's kind of out of sight, out of mind. So some of the deals I was working on, the buyers jetted off to Europe early this year because they haven't been in 2 years. They went out west early this year, and when you're not in Miami, it's really hard to get someone excited about a $10, $20, $30 million house. I do believe that when they return, let's say in October, that I can revive those deals, but I did see some things that I was working on not come together when people's stock portfolios were making them cry.
All right, just want to mention a headline crossing the Bloomberg terminal, and shares of Tesla are reacting. They're up about 2% here in the after hours. This, as Tesla is to ask shareholders to authorize a 3-for-1 stock split.
Another one is...
Right?
Is what comes to mind because Tesla has split its stock.
I guess they filed it. I think they've done an official filing.
Okay.
And that's why this is coming down.
And then they split last year, too.
Yeah, right?
Yeah. Hey, Dina, I want to know about...
I own a little Tesla. Thank you, guys.
There it is.
Nicely done.
I love that. Dina, I'm wondering what's going on when it comes to, we were talking about decline in prices and decline in interest around the country. The housing market is certainly seeing moderating demand. I'm wondering how much this has to do with rising mortgages and how you're thinking about, at what level do we start to see mortgages really start to hit demand?
Right.
I mean, I know it has already, but what's the number you think about?
Well, where I'm seeing the mortgage interest rates be high affect price points so far has really just been in one sector of my marketplace, which is 3 to 5 million, which in Miami Beach is not, it's not the top tier of the marketplace. It's like a mid place. And in that price point, we've seen inventory really dramatically increase, and buyers have several listings to choose from, whereas in 90 days they did not. So that's just one sector, and I hate to use one sector to generalize the whole marketplace, because my listings above 10 million, my listings above 20 million, I'm showing more than my listings in lower price points.
All right. Now, if you have a headline or response to this one, we are going to be so blown away by you, Dina. We do want to mention that Tesla also saying that Larry Ellison, of course, of Oracle, will step down from the board. Larry and Elon, buddies?
Very close. He's also helping finance that purchase of Twitter. He's also the subject of the cover story of Bloomberg Business Week this week, so go and pick it up.
Dina,
do you have anything on Larry Ellison?
No comment.
Okay.
Wait, has he bought from you? Have you done a purchase?
No, I literally have nothing witty or quickly to add.
Okay, that's okay. So, it's interesting. Tim and I had a conversation yesterday about rents in New York City in particular. And I know Florida and Southern Florida is really your world. But it was about kind of record rents and just crazy.
Sure.
And we're like, what happened to everybody leaving New York City? It's like, what has happened in this real estate market?
Well, I think if you're a believer that people are not going to be buying as much because they're concerned about interest rates, then you have to be a believer that they want to rent. So if they're going to be renting, it's going to make the rental market even hotter.
So if people aren't buying, you're saying, right?
No, I'm saying if you're a believer that the market's going to slow down because people don't want to buy, the rates are too high, then what are they going to do? They're going to go rent.
What do you hear from your colleagues in New York, just in the last 20 seconds that we have with you, about slowing? Are we going to see a slowdown in New York when it comes to sales?
I'm not sure. Nobody's complaining. I mean, everyone's still, really crushing it, but we haven't really seen the after effects. The deals that are closing in my market, there's sales millions of dollars above ask. So we're still riding high because those deals happened 60 days ago, and they're just closing now.
Dina, 5 seconds. Is it U.S. buyers or outside the U.S., real quickly?
It's always been U.S., but the outside U.S. buyers are back now, and hopefully one of them will buy my $100 million listing in Golden Beach.
Good luck, good luck. Dina Golden-Tara, Executive Director of Sales at Douglas Elliman from Miami Beach.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week, a busy week, and looking forward to our next duo of guests because we're going to talk with Tory Burch, of course, the founder, designer of the company that bears her name, and the president of the Tory Burch Foundation. They have an event coming up next week called Embrace Ambition, about women, about entrepreneurs, so timely considering the impact that we've seen in terms of the pandemic and really the economy when it comes to women.
Yeah, really looking forward to that conversation. In the meantime, let's get over to Doug Krisner, who has a wrap on today's markets. Hey, Doug.
Yeah, we'll get to what happened in the regular session. I want to touch on what we're getting now after the closing bell. Tesla will ask shareholders to authorize a 3-for-1 stock split. And right now, Tesla shares in late trading up about 1.2%. A lot of damage done on the equity side today. We began the day with a very hot reading on retail inflation. Consumer prices last month up by a whopping 8.6%, much above forecast. And the market then was struggling to reprice the path of Fed tightening. We've got the Fed meeting next week. It's already signaled an inclination to raise rates by 50 basis points. But now the challenge is in pricing for the possibility of a 75 basis point hike. That probability is around 50%. So we have the Dow today losing 2.7%. The S&P testing session lows. We were finished right at 3,900 for the S&P with a loss of about 2.9% today. NASDAQ comp comes in by 3.5%. But look at the Treasury market. Yields spiking across the curve, particularly at the short end. That reflects, obviously, expectations for a faster pace of tightening. A 2-year Treasury up 25 basis points in a single day. We were last quoted in New York at a yield of 3.06%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Carol Massar, Tim Stenovic, we are live in our Interactive Brokers studio. We are streaming on YouTube. Well, the Tory Burch Foundation has provided more than $1.2 million in grants to help women grow their businesses, and the Tory Burch Capital Program has distributed more than $75 million in loans to nearly 4,800 women entrepreneurs. The foundation gearing up for its Embrace Ambition Summit. That's next week, and we're delighted to have with us joining us on the phone in New York City, Tory Burch, of course, founder, designer, and executive chairman of the company and brand that bears her name, and the president of the Tory Burch Foundation, Lori Fabiano, both, as I said, on the phone in New York City. Welcome to both of you. Tory, great to have you back on Bloomberg. Lori, welcome. And I've got to say, I've enjoyed the conversations, Tory, that we've had over the years when it comes to the work that you guys are doing with your foundation for women entrepreneurs. I have to say your summit, I'm curious about the tone, the conversations coming off the pandemic, coming off of, again, questionable times when it comes to the economic outlook. That tends to impact minorities and women much more severely. So tell us a little bit about what we can anticipate, Tory, next week.
Yeah, I mean, listen, it's very good timing based on some of the things that we all have experienced the last 2 years. It's been a heartbreaking pandemic, obviously, but women have been hit extra hard. And 2 million women have left the job force alone. So you can imagine the impact that takes on women in general, but the economy.
Lori, what specifically are you doing at the foundation in order to help these women who have been affected?
Well, we created one program in particular. It's grants for women of color, entrepreneurs, and we did that in partnership with the Fearless Fund and the Crew, and also with some help from Goldman Sachs. And that is literally to provide grants very quickly to women of color business owners that are in danger of losing their businesses, and we want to see them sustain and thrive. But during the pandemic, we also really pivoted and became one of the primary resources for women trying to get PPP loans and for women in general trying to just get the information they needed to stay in business. We created a web series, and for a while it was running literally every single week with news and information that women entrepreneurs really needed. And tens of thousands of women have been on these on our web series.
You know, Tori, one of the things I remembered from, and it's years ago, and I think it's when you were starting your foundation and you were talking about, you know, these grants for women and entrepreneurs, and, you know, you had this money to allocate, and yet people weren't coming up or applying for it. What has changed over the years when it comes to women knowing that there are sources out there and accessing, financial help and assistance, whether it's starting a business? And I think about your summit, right? It's now in its third year. The conversations around double standards and stereotypes. How is all of this evolving? And fingers crossed, getting better.
Yeah, I mean, first of all, the summit we do every 2 years, and so it's going to be. I think the first one was in 2018, so this will be our third summit. But I think the system and program wasn't right initially. We had to figure it out, and we needed to sort of crack it and realized that we needed to find the women at the right time in the cycle of their business and when they actually needed the loan. So once we did that, we saw the enormous need. And just the program that Lori just mentioned, I can't even tell you, I think there were thousands of applicants that applied.
7,000 applicants.
7,000. So the need is enormous.
What are the types of businesses that are applying? Who are the types of people who are applying? Give us an idea of who they are, Lori.
It really runs the gamut, and it's from all over the country. I mean, you know, we see an Alaskan fisherman.
Wow.
We see cosmetic businesses. We see architects, doctors even. A company called Barabee, which is super exciting, is weighted blankets. Yeah, that's one of our fellows. But I think straight across what the program Tori is talking about, our fellows program is our signature program, and the women in that program are extraordinary, and all of them they are. Yeah. I mean, what's also amazing about these women businesses, and it's so wonderful because that's who Tori is. I mean, when she started her company, she started it to really start a foundation. But that's what we're seeing women do. There's always a double bottom line. They're giving back in extraordinary ways, and they're becoming so pivotal in their communities. And so it's really our honor to help those kind of businesses thrive.
Well, what is it, Tori, too, about that? I was talking to, on a panel at Milken, the creator, the founder of Figs. And it's just interesting that, like, from the get-go, women think about, okay, so what's my give back to the community? And just get about 30 seconds, and then we'll come back and do some more.
Just quickly, when I first started the business, I was told never to mention purpose and business in the same sentence. And clearly today, businesses aren't innovative without purpose. Women understand that better than anyone. And so when you talk about the entrepreneurs we work with, it's the number one thing they're thinking about is how do they create positive change.
Yeah, and if I think about it from a consumer basis, like increasingly consumers care about that. Hold on for a second. We're going to do a little bit of news, but we're going to come back with Tori Burch, founder, designer, executive chair, of course, of Tori Burch, Lori Fabiano, president of the Tori Burch Foundation. We want to hear a little bit more about who is going to be at the Embrace Ambition Summit. We'll continue our conversation in just a moment.
In the meantime, let's go from New York City down to Washington, D.C., where we check in with Nancy Lyons for an update on the latest when it comes to world and national news. Hey there, Nance.
Thanks, Tim. Well, the White House is confronting some very challenging economic news. The latest report on the Consumer Price Index shows inflation rose 8.6% in May. President Biden addressed the issue while visiting the Port of Los Angeles.
Make no mistake about it. I understand inflation is a real challenge to American families. Today's inflation report confirmed what Americans already know. Putin's price hike is hitting America hard. Gas prices at the pump, energy and food prices account for half of the monthly price increases since May.
Biden called on Congress to pass legislation to cut prices for shipping, prescription drugs, and energy. The Biden administration is lifting the requirement that international air travelers to the U.S. take a COVID test within a day before boarding their flights. The change that takes effect Sunday at midnight eases one of the last remaining government mandates regarding COVID. The World Health Organization says it needs more data to determine whether a lab leak set off the COVID pandemic.
The UN Health Body's advisory panel on the virus's origins has put out its first full report since it formed last October. It says a review of all coronavirus-related activities at the lab in Wuhan, China would be needed to determine the source of the pandemic. They also call for further study of the wet market that's also been named as a potential jumping-off point for COVID. China has resisted efforts to investigate the Wuhan lab's role, but a foreign ministry spokesman says his country has shown transparency and openness. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic, live in our Bloomberg Interactive Brokers studio, streaming on YouTube, watching shares of Tesla in the after hours. Some headlines breaking after the close. Stock right now, up about 1% in the trade. The company filing to split shares 3 for 1 as the stock has gone down a lot.
Yeah, the company said that it will ask shareholders to approve a 3-for-1 stock split at their August annual meeting. That's according to a proxy statement filed Friday after the market closed. Carol, you mentioned the stock is higher, about 1% right now. It did jump earlier as much as 2.2% in post-market trading. Now, this proposed split comes in the form of a dividend, comes amid a sharp sell-off in Tesla, which saw its shares underperform broad markets. The stock down nearly 35% compared with an 18% drop for the S&P 500.
Yeah, it's interesting. The EV maker first announcing its plan for a stock split back on March 28th. They did that via tweet, which often happens in terms of news out of Elon and Tesla. It did lack further details at the time. The shareholder meeting will be held August 4th, both virtually and in Austin, Texas, where the company is based.
Nowadays, it's based.
Right,
Just moved from
exactly.
California.
It's been moving around, right?
Yeah.
But it's interesting. And stock splits, we have seen a lot of companies certainly do that. And it definitely makes it more accessible, especially for companies who, or for investors, playing kind of options and futures, I think. And that's why you start to see that.
Exactly. You're right about that. And I always, this is my soapbox that I talk about in an age where you can use brokerages to buy, fractional shares of a company. The stock split doesn't matter as much for access for retail investors, at least if they're, going long the stock.
Right.
But it's still funny to see the stock move on news of a stock split.
Lots of stuff going on. I think it's interesting, Larry Ellison leaving the board, and you do wonder if that has something to do with Twitter, right? And his involvement. I don't know. It's a lot of moving parts and a little fuzzy.
He and Musk have been close in the past, and of course he's helping finance the Twitter deal. I do want to give a plug for the current issue of Bloomberg Business Week. Larry Ellison is on the cover. It depicts him as the Lord of Lanai, the island that he bought just about a decade ago.
Incredible cover image and an incredible story. All right, we're going to get back to our discussion in just a moment.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We had some pretty big news after the bell. Tesla will ask shareholders to approve a 3-for-1 stock split at the annual meeting in August. The stock right now is up about 1%. We had popped a little more than 2% earlier. All of this after a pretty tough day of sledding for the U.S. equity market. We were down substantially, with the S&P 500 giving back more than 2.9%. And we retested that session low of 3,900, right on the money. The catalyst for all of this weakness, a very hot reading on retail inflation for the month of May. CPI surging by a rate of 8.6%, and this really forced markets to reprice the path of Fed tightening. We know the meeting is coming next week. The Fed has already given us an indication of a 50 basis point rate hike being likely, although today the market really had to reprice for the possibility of a 75 basis point move. That probability is around 50%. Dow Industrial Average giving back more than 2.7% today, and in the NASDAQ market, the composite index was down 3.5%. Yields across the U.S. Treasury curve spiking, particularly at the short end. The 2-year jumped 25 basis points alone in a single day. We are last quoted in New York at a yield of 3.06%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, appreciate that update, Doug. Hey, I want to get right back to our guests. We are talking with Tory Burch, founder, designer, and executive chair of Tory Burch, and the president of the Tory Burch Foundation, Lori Fabiano, both on the phone in New York City. We're talking about the upcoming event, Embrace Ambition, on June 14th, so it's next week. I want to talk more about the event and get an idea of what folks who are interested can anticipate from it. But Tory, I've got to say, we're Bloomberg, and I'd be remiss if I didn't ask you on a day, month, year where we are nonstop talking about things like inflation, the health of the consumer, the uncertainty of the outlook. How concerned are you? What are you guys seeing in your business when it comes to the health of the consumer? What about inflation? What about supply chains? Give us a snapshot, if you would.
Listen, it's been a journey. I would say COVID obviously was extremely tough. We had a record year last year, and then we see the first quarter it's a lot tougher. But that said, still very optimistic. And we don't see. We obviously are very concerned about inflation and all that's coming. The supply chain issues are extremely challenging, but we're taking one day at a time, and our business is still extremely strong.
Tory, how have you managed the supply chain? I mean, what changes have you had to make as a result of difficulty getting components, as a difficulty in terms of shipping?
Very luckily, many years ago, about 8 years ago, I really wanted to diversify with where we produce things so we weren't dependent on one area. And I think that has helped us a great deal. So we really manufacture all over the world. And when one country is down, we're moving supply chain to the next.
Well, and when you think about things like labor, are you getting all the workers you want, whether it's in stores and so on? Or if you are you finding you have to pay up for it?
Well, we are not having trouble hiring people or having the people we need right now. And, I think time will tell what the toll that inflation has in store for us.
What do you mean by that? You're not seeing this? Yeah, go ahead.
Well, we just don't. We are not seeing the full impact that I think that's going to be coming our way. So we are preparing the best we can with the unknown, which I think do know that will get much worse.
Well, how do you prepare as executive chairman of the company? How do you prepare for what the unknown is?
I mean, the concept of less is more, less of everything, and everything with more integrity, making sure that our teams are in great shape, really that they're doing well, but focusing on product and innovation. And I think that that's something that people are still shopping. They're still wanting to dream, and that's something that we hope will not change.
I love what you said about less is more, and I do wonder. I have a 19-year-old, and she's very strategic in what she buys. She checks where things are made. She wants to understand the company, and doesn't shop a lot. But what she buys is, as the mother who pays for it,
to last, right?
Yes.
Also, and like I think the consumer has changed, and what's exciting for us is a purpose-driven company is resonating and super important for the world and people that are buying products. They want more to it than just a product.
All right, can I ask you, and then we're going to move back to the summit. So, Tori, we've talked with you about going public. You've told us that, that's never your plan. Is it really completely off the table? I mean, I get the benefits of being a private company. I see it all the time, public versus private, but I'm just curious.
Well, listen, I can never say never to anything. I don't think you can, but I think being private is a luxury. It's something that I truly love, and I think that we have no plans whatsoever to think in a different way.
All right, so let's go back to Embrace Ambition Summit. It is coming up June 14th, which happens to be my brother's birthday, Flag Day.
Hey, happy birthday.
Yeah, so talk to us about, Lori, come on back in on our conversation, the conversations you want to be having at this event that are so relevant. And you have certainly household names, celebrities. You have people that maybe aren't so well known but should be. You have Billie Jean King, which we were marveling about on our planning call this morning, that later this month is the 50th anniversary of the passing of Title IX. I mean, just iconic, Lori.
Absolutely. So we have two icons coming, Dolores Huerta and Billie Jean King, and we're doing that because we're also just trying to call more attention to the fact that history demonstrates one of the biggest biases there are. When you look at history books, women are in a supporting role or they're not there at all. And that is so not true to what actually happened. So now a lot of outlets are correcting that. A lot of people are correcting that. But there's still little girls in school not hearing about all the amazing women like Billie Jean King and Dolores Huerta and many, many others. So it's important to us that we keep highlighting these icons. But in addition to that, we're looking at some of the toughest issues that are facing us today and how bias impacts those issues, be it capital punishment, be it gun safety, be it how we exited Afghanistan. There's a number of important conversations that need to be had, even though sometimes they're difficult. We're going to talk about what systematic racism is and its impact. We're going to talk about the increased violence and bias against Asian Americans. So uncomfortable topics, but ones that we have to have if we're going to have any progress.
Laura, you also have the trans rights activist Chase Strangio, who people probably know if they follow from the ACLU. Talk to us a little bit about Chase.
So Chase is, in my mind, one of the heroes in this world. Chase is actually not going to be at the summit because he needs to be in court that day. So he has found somebody as wonderful as Adi Perez, who is coming from Texas, to talk about what's going on with laws that are impacting transgender children in Texas. And we're going to have an amazing young woman, Rebecca, who is trans, who's going to be talking about her journey as well. And Teek Milan will be facilitating that discussion. And yes, that's another huge thing that's happening in America right now that we feel we need to talk about.
You guys really do cover so many of the things that we actually talk about a lot, big issues. Hey, Tori, just got about 30 seconds left here. What do you hope, once the summit, the conversations are had, what do you hope people walk away with?
You know, one thing I love about our summit is that we have these difficult conversations, but we give ways to action change. And that's something that I'm hoping people will walk away with, that if we can take change one step at a time and everyone there start to look at it that way, we can have real progress.
Well, both of you, thank you so much. Good luck with the event, and look forward to seeing some of those conversations and some of the coverage of it, and really sparking other conversations certainly around the country and around the globe. Tori Birch and the president of the Tori Birch Foundation, Lori Fabiano. Check out the Embrace Ambition Summit, June 14, 2022. That's going to do it for us on Bloomberg Business Week. Tim, quite a week.
Inflation. I'll see if the pizza price has gone up tonight.
Inflation. Have a safe and good weekend, everyone.